different agreement. They are doing agreements with the different vendors to roll out 5G. I think this is commendable, and they are also paying the debt to Indus Tower also. So I think on the base of all of these things, definitely, as of now, fundamentals are weak. But going forward, I think the fundamentals will be improved, and they will get the subscriber base increase. And as on so on the base of it, I think as of now, it is a good level to enter in the stock. However, the for long term, at least for my view, in my view, for 1 to 2 years, it is a good time to enter in the Vodafone, because all the risk I think are already taken care in the price.
Okay. So then our viewer who has invested 1,000 plus shares in Vodafone should hold on to his stock, is what your suggestion is, right? Okay. And on that note, let's go to Rajesh also. What is your perspective on Vodafone technically?
See, so technically, if you see, so definitely it's an underperformer, and I would suggest that there was a gap left on 26th November, a bullish gap left around those level, and also on the weekly chart there was a bullish engulfing formation. So far now the stock is placed around a key support, so somewhere around 7.20 to 7.10 there is a base formation. So as of now, hold with that stop loss, but I would suggest he can exit on a bounce like 9.80 is its 50 EMA, which has been acting as a resistance on any bounce. So for now he can hold, but on a bounce back towards 9 rupees 80 paisa, he needs to recheck charts whether he wants to continue hold or exit on bounce.
Okay, understood. On that note, let's go to our next caller. Chandan is joining us from Mysore. Hi Chandan, good evening. How are you doing? And please go ahead with your query.
Hi ma'am. Ma'am, actually I bought Vindhya Telelinks 20 days before at the price of rupees 2,200 of quantity 25. And presently today it is trading at 2,109. So my query is what will be the long-term target, and price is coming down day by day from past 2-3 days. So whether I can accumulate and hold on with any SL.
Okay, Chandan, can I also know why did you invest in Vindhya Telelinks? Did you read something about this company before investing in it?
Madam, actually, I looked at a chart from 2022, so it is performing decently well. On the chart, it looks like that. So quarter-on-quarter target and achievement also, it is looking very decent. So I thought it may go up for a range of 2,500 to 3,000 before Q4. So in that mindset, I bought, but I need some expertise advice for this.
Okay, Chandan, one last question. When exactly did you purchase these 25 shares?
Madam, this month starting only, madam. December.
Okay, understood. So Rakesh, let's come to you on this one. Our viewer seems to have invested in Vindhya Telelinks. We also got a query on this particular company yesterday. So there is a pretty much of market interest in this stock, and as he said that the stock price has been falling, in fact has been on a downward trend from the 10th of December. So do you recommend that Chandan should hold on to his shares or should he exit?
So if his view is for long term, I think that is a technically good space. And with the Telelink, this company is in the manufacturing and sale of cables, wires, FRP rods, glass, and major they have the revenue in EPC segment. 60% revenue comes from EPC segment, and 40% come from the cable segment. The stock P is around 10.3, and dividend yield is 0.75. However, the ROCE and ROE are very less for the company. But considering the future prospects of the company, I think it's a small cap company. But considering the future prospects of the company, I think for long term, he should hold for at least for 1 year. I think the next target would be for next year, for 1 year, would be 3,000.
Okay. And Rajesh, I'll come to you quickly. I want to ask you because this is something that I had tried and attempted asking my guests yesterday as well. given the current market scenario where most sectors are bleeding left, right, and center, there's uncertainty, there's high volatility in the market, do you suggest that viewers at the moment should look at the small cap space? Because we got a query on Vindhya Telelinks, which, as rightly you pointed, that is a small cap company.
So if we see small cap and mid caps are definitely performing, but considering market conditions, if this fall continues, then the mid caps and small caps will see a drastic sell off. So I would suggest to avoid such less liquid counters. When it comes from a technical front, if we see in the last 1 year, the stock has taken support somewhere around 1850 levels. So for now, he can hold on to the levels 1850 as a stop loss. But if that is breached, then he can expect further sell off in the counter. As of now, on any bounce, the stock is facing resistance on 200 DMA. Now that levels is placed around 2300. So if the stock bounce back towards 23 levels, he needs to recheck whether he wants to hold or to exit position. So for now, 1800 is the support and 2300 is the resistance.
Okay. Let's go across to Venkat Raman. He's calling us from Hyderabad. Good evening, Venkat. Please go ahead with your question.
Yeah, good evening, madam. Yeah, I was allotted Eniro Infra shares, 101 shares. It's an average price of 148.
Okay.
So can I hold it for long term or book partial profit?
Understood. But so Venkat, I would want to know the reason behind your interest in this particular company.
Actually, madam, generally I don't have much knowledge, but generally I will apply for IPO. So on the listing gains only, I am trying to sell it. So, but I'm generally I will go through the analyst. So whether it is a good company or not, on that basis only I will own it for long term. And yesterday it was dropped suddenly 10% like that.
So let's talk a little bit about your IPO interest, Venkat. You said you generally tend to bet on, you tend to, try and buy shares through IPOs. So do you do this every time when an IPO comes? Are you automatically interested in an IPO?
No. When I have money only, I will look for IPO. Otherwise, generally, I will buy only some portion of.
Okay, so I'm assuming your analyst recommended this?
Yes.
Okay. So, Rakesh, let's come to you on Eniro Infra. You heard Venkat, he's invested in, he holds 1 lakh shares of Eniro Infra. Is it a good stock to be invested in?
So the purchase price is pretty good, and he is getting a decent profit. However, about the fundamentals of the company is a small cap company, recently listed. The P is high. However, the ROC and ROE are very high, and it's the business which is a good theme because the company is in the design, construction, operation, maintenance of water and water waste treatment plant and water supply project for government agencies. So theme is looking good, but as of now, my suggestion would be so he should book some profit and rest he should hold for long term.
Okay, understood. And let's quickly now take another query that we have gotten on WhatsApp from Kishore. So 1 second, should we take the WhatsApp query or the call? Okay, let's go across to a caller. Sandeep is calling us from Bengaluru. Hi Sandeep, can you hear me? If you can, please go ahead with your question.
Yeah. Hi ma'am. So I got yesterday 1,000 shares of Power Finance Corporation. Given the Nifty Finance sector dropped today, the share prices have fallen. So just trying to understand how the short-term technicals are looking like on the chart.
Short-term technicals.
Yeah.
Sandeep, when exactly did you invest in Power Finance?
Yesterday, ma'am.
Yesterday. Okay.
Yeah.
And was there a particular reason behind behind your investment?
Yeah, knowing how the power consumption is going to grow drastically in the next few years, I'm usually more inclined towards any stock related to power. So knowing PFC is one of the state-run lender, I thought it's a good bet.
Okay, understood. So Rajesh, since he's asked for a technical perspective on this particular stock, which is Power Finance Corporation. I also see that the P ratio as compared to its peers is pretty less. It's at 7.48. Do you recommend our viewers should hold on to his investment or sell?
See, from the short-term perspective, we are seeing that the stock has formed a lower top, and in the near term, he may not see good returns in this counter as we are seeing selling pressure. But from a higher degree chart structure, long term or medium term, this is a very good buying level. So don't expect immediate returns, but if he is holding for like 1 year, then definitely he can expect that stock to retest its recent swing highs of 560 to 580. So from a near-term perspective, it would be avoid, but from a high degree time frame, yes, definitely a good level to enter.
Okay, so it's a buy on PFC from your end? I'm just confirming. Or a hold?
Yes, he can hold on to it, but don't expect immediate returns in the near term because markets are not in that scenario.
Okay. Now let's go across to Vijay Srinivasan. He's calling us from Chennai. Vanakkam Vijay, how are you doing?
Fine, madam. Fine, madam. How about you?
I'm good too. Please go ahead with your question.
Yeah, about a year ago, I purchased a Sundaram Finance Holding Company for 5,000 shares at the rate of 432 rupees. Now it has come down to, now it has come down to 300 rupees. Whether I can hold it or sell.
Okay, this is again confirming Sundaram Finance, right?
Sundaram Finance Holding.
Okay,
it's and the parent company is Sundaram Finance.
Okay.
Sundaram Finance Holding is, yes, madam.
Understood. So did you read about the stock before you invested in this one?
Yes, very much, very much. I know about Sundaram Finance. They are one of the best finance company in India at present. And their group company is Sundaram Finance Holding. It's holding of all the TVS group. Sundaram Finance Holding is holding of shares of other TVS group companies.
So it's very good to see that you've read about this stock. I'll take this query to Rajesh, our technical expert. Rajesh, our viewer, has invested in Sundaram Finance. He has, in fact, 5,000 shares of this particular company, and he's pretty much read about this company before investing in it as well. He wants to know the short-term perspective. What would your suggestion to our viewer be?
So his buying is at higher levels and prices have corrected drastically. But if we see the stock is approaching its strong support levels, somewhere around 275 to 280 levels, we can see there is a strong support. During the August month, we saw a rally from this level towards 425 levels. So we are now approaching the rally origin point. So if he has an opportunity, he can average it down around 275 to 80. That also coincide with 200 DMA. So his average will come down, and once the stock bounces back toward 350 to 375 levels, then he can recheck at those levels if he want to hold or exit. But now it's a hold. In fact, he can average on lower levels.
So hold on Sundaram Finance Holdings. Let's now take up a call of Siraj. He's calling us from Chennai. Good evening, Siraj.
Hello.
How are you doing?
Good evening, madam. How are you doing?
I'm doing good too. Thank you for calling us.
Yes,
Go
madam.
ahead with your question.
Yes, madam. Yes, I'm holding Reliance Industries share around 568 units at the price of 1,232 actually. So I just want to know whether to hold this stock further, and also I just want to know what is the short-term outlook of the share, like at least for the 6 months. Is it advisable to hold the share?
Okay. So Siraj, when did you invest in Reliance Industries?
Yeah, I bought it in November.
November. Okay.
Last month, yes.
And did you read about this company before investing in Reliance?
Yes. I read everything. Mainly I bought it because of the affordable valuation now.
Okay.
And I'm well aware of their business and everything.
Okay.
Yeah.
So, Rakesh, let's come to you for Reliance Industries. The 1 year chart looks pretty choppy, and the price has been dropping as well on the charts. In fact, if I can see, since September, in fact, it has been on a downward trend. do you suggest Siraj to hold on to his shares because his main perspective, his main agenda behind buying this stock was because of its affordable valuation? What do you think the future of this stock is?
So
This is for me.
1 year outlook. He's asking for a 1 year outlook on Reliance Industries. This question is for Rakesh.
Okay. So this is Reliance Industries, a large cap stock, and it's the oil to chemical and retail segment. The company is very much known company, and as of now, the stock P is 24.5. However, ROCE and ROE are a little bit below 10, and dividend company is paying dividend. Price to book is 2.03. Considering the other segments and the expansion of the company and digital service business Geo. So and oil and gas, all the services. I think retail segment is going to be very good in going in the future, as well as the digital service business also going to do very well. So I believe as a fundamental, you should hold if you can hold for 1 year, and I think the price should from here. I believe 20% upside is possible in the company in next 1 year.
Well, that is a healthy, good projection of 20% upside. So it's a hold on Reliance Industries, and that brings us to our next caller, Sanjay. He's calling us from Surat. Good evening, Sanjay. Please go ahead with your question.
Yeah, very good evening, madam. I am Sanjay from Surat, and my question is about CG Power. I am holding 125. And my cost is 000 because I am a shareholder of Crompton Greaves, and at that time Crompton Greaves have given us CG Power, so my cost is 000, and still I am holding it from 2014.
Since 2014, so it's been 10 years since you hold on to, since you've been holding on to CG Power and Industrial Solutions. Okay. Understood, sir. Understood your question. I'll take this question to Rajesh and Rakesh later. Rajesh, first starting with you, what is your perspective on CG Power and Industrial Solutions?
So overall, year-on-year basis, if we see the chart of CG Power, definitely it has given healthy returns. And even now, if we see the stock is forming a good base somewhere around 720, 700, any dip is getting bought into. So it definitely hold on to it. 720, 700 is a good base. Recently as well, we saw a strong traction in the counter. We expect this positive momentum to continue. Immediate basis, he can expect 850 to 900 within a couple of months, and within a year, he can expect a 4-digit target. So hold on to it. 720, 700 is a very strong base for the counter.
Okay. And Rakesh, quickly with you, what's your perspective?
So for long-term perspective, stock is pretty much good. And considering the power sector outlook and considering the new electric policy by the government couple of months back, it's 2023 to 2032. I think it's a very good scope for the power sector. We are very bullish on the power sector. And this company has a revenue from power systems 29% and industrial systems 71%. Company has 17 manufacturing facilities across India, and right now they are also increasing their capacity. So because of the capacity expansion, I think that because ROCE and ROE will be little bit down. So maybe once this capacity will be ready to for profit, then the stock definitely will the company will get the better revenue and better profitability. So after that, the stock should also perform. But my perspective, stock is good for 1 year perspective. He can hold.
Okay, so Sanjay, since you've been holding on to CG Power for 10 years or so, our experts recommend that you hold on to this stock as they see a future, good future outlook towards this particular stock.
What level can I accept after 10 years?
Okay, let's answer this question. Rajesh, What would you want to say, Sanjay?
So 10 years would be a very tough task from a technical point. But as I highlighted, in the next 1 year, I'm expecting the stock to move towards 4 digit, that is 1,000 level, and possibly the reciprocal retracements are somewhere around 1250. So 1,000 and 1250 is what I am seeing in the next couple of years.
Got that. Let's go to our next caller, Lakshman. He's calling us from Andhra Pradesh. Good evening, Lakshman. Please go ahead with your question.
Hello, hi, good evening. I had a question with the Hindustan Aeronautics Limited company. I am holding 10 stocks at the price of 4,714 rupees.
Okay.
Actually, I just wanted to know, like, after I bought this share, it is correcting so much heavily recently. Around 7% loss it is there as of now. Do I need to hold the stock or sell? I just wanted to know the recommendation.
Okay, and when exactly did you invest in Hindustan Aeronautics?
Yeah, I have bought it recently, maybe a couple of days back.
Okay,
It is, once I invested, it is going down.
Okay, understood. Okay, so Rakesh, I'll come to you on Hindustan Aeronauticals. Our viewer has invested in this stock. He has 10 shares of this company at 4,714 a piece, and the current price is below his buying price. Do you recommend he should hold on to these shares or sell them?
Yes, so the Hindustan Aeronautics company is a government company and it is in the defense sector. The company is basically in the manufacturing of aircraft, helicopters, and engine accessories. And also, the company provides the services for repair, overhauling, maintenance, or upgrade or more than 70 type of aircraft, helicopter. As of now, the P is 34.6, dividend yield is 0.8, and the return on capital is very pretty, 33.3, and return on equity is 28.9. So considering all the facts and the future outlook of the defense sector, because India is started to export the defense items. So considering the future outlook, I think the company is good for the next 1 to 2 year or 5 year. I think he should hold the company for pretty returns. I'm expecting in the 5 year that stock can double from here.
Okay, understood. Now we'll go to Chandar Prakash. Chandar Prakash Malhotra, in fact. He's calling us from Delhi. Good evening, Chandar. Please go ahead with your question.
I have 10,000 share of Canara Bank at a rate of 117. What is the future for 1 year?
1 year. So since you bought 10,000 shares, it's a huge number of shares of any company. I'm assuming you've read about this, and I'd like to know
yes.
the reason.
Reason is it is a profitable bank. Profit is more than 15,000 in the year. That is why I purchased.
Okay, okay. And sir, sorry, I didn't hear. When exactly did you invest in Canara Bank?
3 months back.
3 months back.
After split, it will split in September. At the beginning of September, then I purchase.
Okay. If you can also pull up Canara Bank's intraday chart and see how the stock has been performing until then. Okay, the stock has been in the negative zone, 0.28% down, and our viewer also seems to be in loss at the moment. So, Rakesh, let's come to you on this one. What is your perspective on Canara Bank? Should he hold on to his shares, sell? What's your outlook like?
So it's a very old bank, Canara Bank, and after the merger with Syndicate Bank, the strength of the bank is increased. As of now, the net interest margin is 3.05 and gross NPA is 4.23 and the net NPA 1.27. So gross loan portfolio is 9,60,000 crore. Bank has a market share of 6.2% in net advance and total deposits. So and the company has 9,000 more than 9,000 branches, more than 10,000 ATMs. So considering all these things, I think the stock P is very low, 5.83, and the price to book is 1.01, and healthy dividend yield 3.13. So I think considering all these things, the future outlook for the banking sector, especially for the PSU bank, I think looking little good. So if he can hold for 1 year, he should hold. at least for 20 to 25% appreciation from this current price.
So hold on Canara Bank. Viewers, we'll have to slip into a short break, but keep sending in your queries on WhatsApp as well as on the calling numbers that's flashing on your screen. We'll be right back on Ask Profit. Do stay tuned for more.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance.
Welcome back to Ask Profit, only on NDTV Profit. Viewers, this is a show where you ask your queries both on WhatsApp and on live calls, and we try and answer them through our guests. And that brings me to the fact that I should introduce them once again. We have Rakesh Singhal, independent analyst, joining us on the fundamental queries, and Rajesh Bhosle, equity, technical and derivative analyst at Angel One, present here with us to answer all your technical queries. Welcome again, gentlemen, and we'll go ahead with our first caller right after this break, Satya Narayan. Good evening, Satya Narayan. Could you please go ahead with your question?
Yeah, very good evening. Currently, I'm holding IDFC First Bank, about 17,000 shares at an average price of 81 rupees.
Okay.
Can you tell me what is the medium term and long term outlook of the share?
Satyanarayan, I'd like to ask you, when did you invest in IDFC First Bank? Because this is a lot of shares.
Over a period of a year.
Over a period of 1 year?
Yeah.
Okay. And did something particular, interest you about IDFC First Bank, or did your analysts recommend you? How did you go about buying so many stocks?
One of the reasons that I bought was One is the management and the merger of IDFC with IDFC First Bank. That was one of the trigger.
Okay. Rajesh, let's go with IDFC First Bank. Our viewer wants to know a medium to long-term outlook on this stock. What is your perspective? As far as I can see on my chart, the stock has been trading with a downward bias in the past 1 year. And he told that his trigger for buying the stock was the merger, was a demerger. So go ahead with your analysis.
So yes, definitely in last 1 year, we have seen price correction in this stock. But in the last 2 months, we have not seen any major traction. In fact, the stock is forming a base somewhere around 62, 63 levels. So even today, if we see, it ended on a positive note. So somewhere the stock is forming a base. If we see a higher degree chart, weekly chart, so the stock is forming a base on the weekly 200-day moving average. Also, last year, the stock had rallied from this level in April, where there was a very spectacular run. So as of now, the stock is on the strong support, somewhere around 58 to 60. The stock has a base level. One can expect a bounce from current level, but I don't expect a major move, possibly towards 74 levels, which is its 200 DMA, which has acted as a resistance in the past. So expect a bounce, but 7400 seems to be a stiff resistance for now.
Understood. Now we have Kamal joining us on the call all the way from Indore. Hi Kamal, good evening. Please go ahead with your question.
Good evening. Actually, my question is regarding Federal Bank. So I bought around 150 shares at the rate of 160, around 8-9 months back. So the stock is very good, but I just wanted to check, can I add more quantity on this for long term, at least 2 to 3 years?
Okay, and did you read about Federal Bank somewhere before investing in this stock?
Yes. Yeah, I was tracking this stock at the rate of 92. And the track record is very good, and the results, quarterly result as well as the yearly result growth. So I am aware about that stock.
Kamal, it's very good to know that you've been reading about the bank that you're investing in. Rakesh, I'll take this question to you. What is your perspective on Federal Bank? Our viewer seems to have booked, seems to be in some profits. Should he add more shares to his portfolio?
So for Federal Bank, I think the bank is very good shape. And as of now, the net interest margin is 3.19%, gross NPA is 2.29, and net NPA is 0.64. A company has a very good branch network of more than 1,400 branches and more than 1,900 ATMs. As of now, the stock P is 11.9. Company is also paying the dividend, so dividend yield is 0.6. Company has very good ROCE as of now. And in the last 5 years, the sales growth is more than 15%, and profit growth is more than 24%. So I think, and as of now, the price to book is near 5-year median price to book. So considering all these things and considering the future outlook for the banking sector, I think it's as of now, it's not good time because stock is as of now near the high. But if he can get any 10 to 15% correction in the stock, then he can further add on that level.
Okay, thank you. Let's go across to Mayappan, calling from Tamil Nadu. I hope I'm pronouncing your name right. Mayappan, can you hear me?
Yeah, I'm online.
Is your name Mayappan?
Yeah, I'm online.
Okay. Vanakkam, Mayappan. How are you doing?
Yeah, fine.
Great. Please go ahead with your question.
Yes, I bought a Paytm around 400 level.
Okay.
Can I hold for a year or so? Or which rate is better to exit?
Understood, Mayappan. Thank you for calling us. Rajesh, let's go across to you for Paytm. The stock has been performing pretty well, especially since the 8th of September. It has been on an upward trend, and the company is also repeatedly trying various measures to reduce its debt and be in a better position. Do you think Mayappan should sell his shares or add more? What is your perspective?
Congratulations to him. He bought at a very good levels. And now if we see the weekly chart, the stock has approached its October, last year's October swing high. So here we are seeing some stiff resistance, and also if we see the sharp rally, the indicators are a bit overbought. So I would suggest that if possible, he can book partial profit, and if in case he gets a dip back towards 850, 880, there he can re-enter. For now, he can book partial profit, and partial he can book somewhere around 1250, 1300. But now there is chances that there can be a consolidation or price correction, since it's on a resistance and since the indicators are a bit overbought.
Okay, understood. So it's a sell on Paytm. Let's go to Dhanu. Dhanu is joining us from Bengaluru. Namaskara, Dhanu. How are you doing? Dhanu, can you hear me?
Yes, madam. I can hear you.
How are you doing, Dhanu?
I'm doing great.
Thank you for calling Ask Profit. Please go ahead with your question.
Yeah, my question was related to two stocks. One is NTPC and the other one is Coal India. My reason to buying them was purely on price to book value and the dividend yield. I have 1,000 shares of both. NTPC at 380 and Coal India at 442. So what are the long-term perspectives? Should I hold or should I add more at this level?
Okay, understood. So Rakesh, let's go to you for NTPC first. How does it look on the charts and what is your perspective?
NTPC, for the long-term perspective and considering the sector outlook, I think it's a very fantastic company for long-term. Companies with its subsidiary and associate and JV is primarily involved in generation and sale of bulk power to state power utilities. So NTPC primarily involved in generation and sale of bulk power to state power utility. Other business of the group include consultancy, project management, supervision, energy trading, and oil and gas exploration, coal mining. Major businesses from generation energy, it is 91%, and other businesses 99%. Current PE is 14.8. Stock is having very good healthy dividend yield 2.3%, and sales growth from the last 5 years 12.2%. Profit growth is 6.6%. Considering the future outlook, I think the stock you should hold the stock for 1 to 2 years, and I think for 1 to 2 year perspective, from here from the current price, I think 20 to 30% profit is expected.
Okay, so it's a hold on NTPC. And Rajesh, let's talk about Coal India, since our viewer was interested in this particular stock. This company is mainly engaged in the production of coal and also operates in coal washeries, but it has a low PE ratio as compared to its peers. What would your recommendation to our viewer be?
So definitely hold on to the Coal India. The stock has already corrected and it's approaching its long-term support level somewhere around 375 to 380. We see a strong base happening for this counter. We can see a weekly 200 DMA, and also in the past we had seen stock rallying from the levels of 375 to 380. So as of now, hold the stock is very good fundamentally, and long-term levels are coming up. So definitely hold on to this counter.
Okay. So it's a hold on Coal India as well as NTPC, and that takes us to Venkateshwar Rao calling us all the way from Bengaluru. Good evening, Venkateshwar. Please go ahead with your question. Venkateshwar, can you hear me? Okay, I'm going to take up his query. He holds 50 shares of Tube Investments of India at 2,600 a piece. So he's sitting on good profits. He's asking if he should hold or sell, and is also asking for a long-term outlook. Rakesh, let's talk about Tube Investments of India. The company is a leading manufacturer of a wide range of products such as automotive, railway, construction, mining, agriculture, etc. But has been pretty choppy on the charts since July at least, and also after that it dropped pretty much. Do you think it's a good stock to be invested in from the long-term perspective?
Yeah, Tube Investment of India is a very leading company in, as you said, and they had the very business segment, industrial segment. They are getting the revenue industrial segment 31% from the manufacturing, electric motors, alternator drivers, And from the engineering division, they are getting 28%, consisting of cold rolled steel strip, precision steel tubes. And apart from that, they are getting the revenue from power system 15%. And apart from that, metal form product is 9%. There are other venture also like mobility and gear division. And as of now, the P is a little bit high. So considering the fundamental, I think P little bit high, which is alarming sign. Otherwise, other things like sales growth from the last 5 year at 24%, profit growth from the last 5 year 38.3%, return on capital is very high 28.2%. So considering the PE only, I think as of now he should book some profit, and once the stock gets some correction 10 to 15%, and he can further add for the long term. But for long term, I think the stock is very good.
Okay. Now, so that's a sell on tube investments. We'll go to Vishal calling us from Hyderabad. Good evening, Vishal. How are you?
Good evening, madam. I am fine.
Please go ahead with your question, Vishal.
I have a query regarding the stock name Vishal Mega Mart, which I bought 20 shares at the price 107.
Okay.
So I want to know whether to hold it or add more shares to it. I want to add more shares. So
understood. Okay. Vishal, what attracted you to Vishal Mega Mart apart from the name? That both the name of the company and your name are...
No, not.
Just joking.
Not
Please
like
go
that.
ahead.
Actually, I thought it will be like the next D-Mart.
Okay.
It will grow like D-Mart. So I invested. I visited the store and I liked it.
It's a good thought. I will go to Rajesh for your question. Rajesh, Vishal Mega Mart share, it debuted on the stock exchanges with a 41% premium over its IPO price. Pretty attractive. Do you recommend Vishal to hold on to this stock?
Since there is no technical data, I won't be able to comment on it.
Okay. Rakesh, what about you?
Yes, so Vishal Mega Mart is among the India top 3 offline first diversified retailer by retail space. And company has a product portfolio of apparel, FMCG. Company has the total stores of 645 as of now, and company is present in 194 tier 1 cities and more than 450 tier 2 cities and beyond. And average storage size is 18,000 square feet. Company has also some own brands. 19 brands surpassed 100 crore in sales and 6 exceeded 500 crore sales. Company is also in third party manufacturing also. So considering the outlook and because companies recently listed, the more data is not available. But I think considering the outlook for 1 to 2 year, he can hold, and he can add if any correction, if he get any opportunity in the correction around 10 to 20%.
Okay, so is it a hold or a sell on Vishal Mega Mart?
It's a hold.
It's a hold. Okay. Nitin is joining us on the call all the way from Bengaluru. Good evening, Nitin. Please go ahead with your question. Okay, Nitin, can you hear me? Okay, I think we have lost Nitin on the phone line, but I'll take up his query. He holds 1,390 shares of Supreme Industries at 236 rupees. The current price of the stock is around 5,029 rupees. So it's a good profit that he's sitting on. And Supreme Industries Limited is India's leading plastics product manufacturer, offering a wide and comprehensive range of plastic products in India. So basically involved in the plastic industry. Pretty interesting space because Rakesh, I'll come to you again for Supreme Industries. Firstly, before we address this particular stock, I'd like to know, is it a good space to be invested in? Because as the government focuses on going green, using less plastics, what should be the motivating factor to be invested in this space? Is it a thumbs up or a thumbs down from your end?
See, it is in the plastic sector, but it is not that government is considering the green, but the plastic, it is not going to be happen that in another 1 year or 2 year, the plastic is going to be banned. So companies operating in various product categories like plastic piping system, cross-laminated films and products, protective packaging products, industrial molded components, molded furniture. So, and considering the sales growth in the last 5 years, 12.6%. Profit growth is more than 20%. and the ROC is 28%. So I think all the parameters are being good. There's no red flag on the company as of now. So I think on the basis of all these things, fundamentals, he can hold.
Okay, understood. Now we have Saurabh Singhal joining us from Greater Noida. Hi, good evening, Saurabh. Can you hear me? Saurabh, can you hear me? Okay, Saurabh seems to be somewhere else, engaged somewhere else. I'll take his query. He's written to us on AMI Organic, and he holds 2,500 shares of AMI Organic at 1,196 rupees. Rajesh, what is your perspective on AMI Organic?
So, first of all, a very good level. He has bought the stock and already sitting on strong profit. Even now, the overall chart structure remains positive, where we have seen any dip is getting bought on the 50-day moving average. We expect this positive momentum to continue. As of now, the stock has a strong support around 2000 levels, and in the near term, possibly stock is headed towards 2350 and 2350 and then towards 2500 levels. So yes, definitely hold on to it.
It's a hold on AMI Organic. Abhishek now is calling us from Tamil Nadu. Hi Abhishek, good evening, vanakkam.
Good evening, ma'am.
Please go ahead with your question.
My query is on Sterling and Wilson Renewable Energy.
Okay.
Now it's in reducing its debt from last quarter, and it's showing a positive EBITDA and positive PAT from last 3 quarters. I bought 100 shares at 500 level. Now it's down by 5%.
Okay.
So shall I add this stocks more at this level because the tailwind is on green energy sector? So the overview on this company and fundamentals.
Okay. Rakesh, you heard our viewer. He's invested in Sterling, Wilson and Renewable Energy, and from the price that he has bought, the stock price has reduced significantly. He's asking if this is a attractive point of time to buy more shares of this company. What is your recommendation?
So the sector is a sunrise sector. Sterling Wilson Solar is one of the leading end-to-end solar engineering, procurement and construction solution providers globally. And it's also engaged in the operation and maintenance of solar power project. Company is backed by strong parentage of Reliance Industries. So he should also consider this fact. And companies in EPC portfolio is 18, GWP and O&M portfolio is 7.6%. However, the fundamentals as of now is not good. But I think considering the sector outlook, future outlook of the sector, I think he should hold and the level is very good as of now to enter in the company. Company has very good geographical presence and very good clients, NTPC, Clean Tech Solar, Sedentica, and very good order book as of now, more than 8,000 crore order book comparing to 4,900 order book as on March 23. So very good outlook for the company.
Okay.
So you should hold for the 1 to 2 year.
Okay, so it's a hold on Sterling and Wilson. Let's go across to Chandan Kumar. He's calling us from Delhi. Hi Chandan, good evening. Please go ahead with your question.
Hello ma'am, good evening.
Good evening. Go ahead with your question, Chandan.
Yeah, I was holding Prakash Industries, a total 3,000 quantity at buying price 170.5, and which I sold at 178.6 just few days back and just booked some profit. But now Prakash Industries had fallen after that in line with broader market, and I again entered at 173. And today Prakash Industries has reached up to 167. So I want to know outlook of this Prakash Industries, and my horizon is 1 month.
Okay, so you're looking for a very short-term outlook.
Right.
Understood. Rajesh, so our viewer Chandan, calling us from Delhi, has invested in Prakash Industries before. He exited and then thought of reinvesting in this again. Prakash Industries is engaged in the business of manufacturing and sale of steel products and generation of power. He's asking for a short-term perspective. Do you think this is the right time to invest? And what should he do with his investment at the moment? Because the share price has fallen.
See, overall, 1 month is a very short term if we consider current market scenario where its market is very choppy. But having said that, the stock is forming a very strong base around 160 levels. Recently, we had seen a weekly bullish engulfing pattern on a weekly 89 EMA. So definitely, the stock is forming a base, but in a near term, not sure whether he will get good returns because on the high side 200 DMA is acting as a resistance on any bound. So considering 1 month there won't be any view, but if he's holding for like 3 to 4 months, yes, the stock is forming a base and possibly he can expect a move towards 180 185 levels.
So again, just for clarity purpose, is it a hold or a buy on Prakash Industries?
Yes, he can hold on to it.
It's okay, he can hold on to his shares. Now we will take up a WhatsApp query. Kishore has written to us on WhatsApp and he's seeking advice on Route Mobile. He holds this stock since April 2022. He bought 288 shares at an average price of 1,426 rupees. He's asking if he should hold or exit this stock. Now this is pretty interesting and a couple of pointers that I'd like to share about Route Mobile. 57.56% stake of the company was acquired by a Belgium-based Proximus Group in May 2024, after which the stock did see an upward run on the charts. But after that, it did not really sustain that high momentum. Should our viewer, I'll go to you for this, Rakesh, should our viewer be invested in Route Mobile? Is it a good stock to be invested in? Because it is pretty volatile. After the Belgium-based company invested in this and acquired 57% of this company, it went high and then it again became low.
See, Route Mobile is a cloud communication platform service provider catering to enterprises, OTT player, and mobile network operators. So business is little good, and after this Route Mobile become part of Proximus Group, I think there will be some value add. And as of now, the stock P is 25, dividend yield is 0.78. From last 5 years, sales growth is 36.6%, profit growth is 45.5%. ROC is very good, 20%, and ROE is 18.2%. So considering all these fundamentals things, I think the stock is good for the future also, because we are in this segment, the company, mobile network segment, OTT player segment. So I think the future outlook is looking good. So he can hold for 1 to 2 years.
Understood. Now Sasmita is joining us all the way from Visakhapatnam. Hi Sasmita, good evening. Please go ahead with your question.
Good evening. I would like to ask that 8 months before I purchased almost 4,000 shares of PC Jewelers, and that time it was 11 rupees, means my average was 11, and later on when it got split, then again I purchased some. So now the total number of shares are 9,000 at the average of 15.78.
Okay. Rajesh, please go ahead with your question, Sasmita. Please continue.
I would like to know that whether to hold these shares or exit the position.
Understood, Sasmita. I'll take this question to Rajesh, our technical expert. Rajesh, the ROC and ROE values of this stock is negative. Do you suggest that Sasmita should book her profits and exit or hold on to the company?
So overall chart structure remains positive and continues in a higher top, higher bottom formation. Yes, in last couple of session profit booking is witnessed, but that is along with the broader market. So the overall trend remains positive, and we expect that possibly 21 to 22 levels is what we can expect in the near term. The stock has a very strong support somewhere around 1550, where a bullish gap has been led. So definitely hold. Once the market resumes its up move, this counter will outperform, possibly back towards 21-22 levels.
Understood. Thank you so much for your time, both gentlemen, Rakesh and Rajesh. I hope I didn't get confused with both your names and crisscross them during the show, because Trust me, it was a struggle to juggle between Rakesh and Rajesh. But thank you again. Thank you so much for being such sports and answering all our queries. And viewers, thank you so much for tuning in to Ask Profit. You can continue writing to us on WhatsApp and also call us both in the morning and evening. We're here to take your queries. Until then, stay tuned to NDTV Profit for more news and updates.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Extending their losing streak, Nifty Sensex closed at 3-week lows on the back of Fed's decision to cut rates by 25 basis points. Sensex slumps over 950 points at closing. IT and bank stocks weigh most except Nifty Pharma, which rose nearly 2%. All sectoral indices fell. The rupee falls beyond 85 against US dollar. This is on the back of a hawkish outlook from the US Federal Reserve, indicating fewer rate cuts in 2025. We created our own rule book as there were no rules set for us, says Gautam Singhania on the real estate industry in an exclusive conversation with NDTV Profit. He says their main focus is on the affordable luxury segment. In an ongoing effort to curb oversight on IPOs by small and medium enterprises, SEBI board approves a series of proposals. Says issuers need to have reported 1 crore rupees of profit in 2 out of the past 3 years. High drama erupts outside Parliament as BJP and Congress trade claims on MPs being pushed. This was amid protest over Home Minister Amit Shah's remarks on Dr. B.R. Ambedkar. Ukraine strikes Russian territory with at least 13 missiles and 84 drones, triggering a fire at an oil refinery in the southern Rostov region that burned for hours. Hello and welcome. Good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour of this show, we will bring you the latest on markets as well as national and international news. Now to begin with, the markets have been on a losing streak over the past 1 week, and then the Fed shocker that rate cuts would slow down next year. The Nifty and Sensex closed at 3-week lows, and Harsh joins us with a wrap of all the action on the bourses.
Markets continue to be under pressure, this time around for slightly different reasons. Macros is in focus, and you had some commentary coming in from the FOMC in the US talking about how they'll be cautious with regard to rate cuts, and that's why you're seeing a bit of a cut on both the Nifty as well as the Nifty Bank, even though we saw a bit of a recovery in the Nifty Bank. Let's pull up the intraday chart on both the Nifty first and thereafter the Nifty Bank. Stable and solid is how I would call the Nifty after that 1% gap down that we saw earlier this morning, and thereafter it's been a flattish kind of a move on the Nifty. So not bad at all. Very, very tight range in which the Nifty has traded in for a predominant part of the day. The Nifty Bank on the flip side saw a bit of a recovery. We saw recovery, saw some weakness, and kept on with that weakness. Some key levels that we'll have to look out for, especially the 51K mark on the Nifty Bank, will become crucial very, very quickly. Let's quickly switch focus though. Look at the heat map on the Nifty, see which stocks were really doing well on a day like this. You had a Dr. Reddy's and some hospital as well as some bit of pharma which did well. The defensives obviously came to the fore. You had some bit of life insurance as well, an SBI Life, a Sundaram Finance doing well as well. But outside of that, it was a solid coat of red. Trend slipped into the red as well today. It's been a couple of days since that it's done quite well. In terms of contributors, the heavyweights really chipped in terms of the 1% cut that we saw. ICICI, Reliance, HDFC, Infi, all four of them contributing solidly to the losses on the Nifty 50. Let's pull up the heat map with regard to sectors, see which sectors have really taken a bit of a knock, and you'll see IT, not surprising there. Nifty Bank down 1% plus. The Nifty Metals also taking a bit of a knock, and that is reflecting on the Nifty at the moment. The broader markets did fairly well in comparison. The advanced decline, the 0.25% low on the mid cap, similar number on the small cap index as well, around 1/3%. The advanced decline also stood decentish. And in terms of the BSE 500 top gainers, top losers, that's the list in front of you just coming up. Some pharma names, especially on the winning side of things. On the losing side, it's a bit of a mixed bag.
So are we in a grip of a bear market? Well, we asked this question to Parag Thakkar of Fort Capital. Let's take a look at what he said.
I would not say so, because in my view, in fact, the government, after the election season is over, is going to focus back on economy. RBI has made it very clear that now their priority is growth. So I am saying that if economy continues to do well, at some point this trade of Trump trade, what I call it, where dollar appreciated from, say, so dollar index moved from below 100 to 107, or US 10-year moved from 3.4 to 4.3, 4.4. At some point this trade will reverse. And if that coincides with economic recovery in India, we are headed for good times also. So you cannot rule out that possibility.
What does the Fed's latest rate cut mean for the economy? Robert Sorkin of Citi Research sheds light on its impact and the road ahead under Trump's leadership.
They're increasingly concerned about inflation risk. Part of that's because inflation has been a little bit stickier in some recent prints in the U.S. Not drastically so to really change my view that inflation is gradually moving back down the target, but it's been a little bit stickier. But the more important point, I think, that's implicit in a lot of the communication is that we have the Trump administration coming next year. And when you add up a lot of potential Trump policies, to us, they look more inflationary than disinflationary. So we are also concerned about potential upside risk to inflation. And that might mean that the Fed would have to go a bit slower.
We also spoke to Sajid Shenoy of JP Morgan and asked him if central banks in Asia will be able to cut rates even when US Fed is not in the rate cutting mode. How strengthening dollar will affect developing countries? Take a look.
The US recession was coming in 2024. We're ending 24 with US growth nowhere close to a negative number, but in almost 3%. Now, why does this matter? It matters because the last mile of disinflation in the US is proving very sticky. Core inflation has come from 9 down to 3. But over the last year, it's gotten stuck at 3%. If you look closely at the month-on-month numbers, core inflation has averaged very close to 3%. It's all services inflation, right, which is domestic. Now, given that, even though the Fed has begun its easing cycle and will perhaps do more, the pace of easing in the next year is going to be slower, even without the tariff risk, because the last mile of disinflation is proving harder, right? Keeping US growth performance and keeping where the US Fed might be by the end of next year, markets have already priced some of that in. So what you've seen is the dollar has strengthened in the last 2 months. Part of it is Trump, but part of it is the US exceptionalism. And we've seen US 10-year bond yields back above 4%. And that means, for an emerging markets perspective, that global financial conditions are tight and hostile. When the dollar is stronger, it means all emerging market currencies are under pressure.
Right.
So while countries like India and Korea, which have strong external buffers, can say we've got foreign currency reserves to manage the exchange rate pressure, and we can use interest rates to respond to the domestic economy, there are other countries that are not as well placed. So in Indonesia of this world should have been cutting rates this year, but cannot cut rates because Indonesia's external situation is far more challenged, right? In fact, in the limit, if the dollar continues to strengthen, there's a risk Indonesia may have to hike interest rates next year, even though its domestic conditions will argue for a cut, or will need a cut. So you're exactly right that you could get into a potent situation next year where the tariffs reinforce US exceptionalism. Because to the extent that looser fiscal policy and deregulation, at least in the near term, provide some growth impetus to the US growth may not suffer as much as the rest of the world will because of higher tariffs. And when you get these growth differentials, monetary policy will also have to be, at odds with each other, and you'll get concerns about a stronger dollar and higher.
Let's get you the fund flow picture. In today's market movement, domestic institutional investors mopped in shares worth 3,943 crore rupees, and on the other hand, their foreign counterparts were on the selling side, offloading shares worth 4,225 crore rupees. The Indian rupee has hit a record low against the dollar on the back of a hawkish outlook from the US Federal Reserve. Pallavi is joining us to tell us how this would impact the general consumer.
Well, we finally saw the rupee breach 85 against the dollar. The dollar index, meanwhile, continues to remain very strong. And this was all after the Federal Reserve cut rates by 25 basis points. While that was in line with expectations, the Federal Reserve also signaled fewer rate reductions in the year 2025 than was being initially expected. We were initially expecting 4 previously. That number is now at 2 rate cuts that we're looking at in 2025. Now, essentially, let's unpack what happens when the rupee weakens. It becomes weaker to the dollar, meaning you need more rupees to buy the same amount of a good in dollars. It also has an indirect impact. Now, for instance, it means costlier crude oil. Let's remember that India is a net importer of crude oil. Also, the raw material to create petrol and diesel. That can also mean higher transportation costs, which will impact the cost of other goods as well. Now, if you're, for instance, planning to study abroad, a fall in the rupee does mean that you will need a bigger budget. A positive impact of the rupee, however, is that exports become cheap. Now, export-oriented sectors such as pharma, IT, auto, gems and jewelry could possibly benefit from a depreciating rupee.
Thanks for that, Pallavi. Now let's take a look at some global market action as well. Wall Street bounces back after Fed's rate cut decision results in the Dow plunging nearly 1,100 points. All indices trade nearly 1% higher. European markets tumbled in trade following the global trend after the US Federal Reserve's decision on rate cuts, whereas the Bank of England decided to go the Bank of Japan route and hold rates steady. In an ongoing effort to curb oversight on IPOs by small and medium enterprises, market regulator SEBI's board has approved a series of proposals bringing the rules for SME IPOs closer to those of main board IPOs. Charu is joining us with more on this.
SEBI had its board meeting on December 18, that was yesterday, and a plethora of topics were discussed and a set of approvals came about. One of the most important ones were more stringent measures to regulate SME IPOs. Now, there was an exuberance in the market about the SME IPOs earlier, and that is why the regulator thought that it would be better to get more stringent rules and bring them closer to the main board listing. Now, the key measures that have been brought in to regulate the SME IPOs include the capping of offer for sale at about 20%. The promoters will only get a release after 2 years of the issue. Nobody is allowed to sell more than 50%. For general purposes, only about at least 10 crores of the amount generated will be used. Apart from this, also the DRHP has to be available for the public comments and for public information using newspapers, websites and different mediums. And it is also very important that there is a scanner code with that DRHP ad and information given to the people so that they can access this information. So they have all in all been brought in more closer to the main board listing.
Right, Charu. Now, Tata Consumer Products has dismissed reports claiming its joint venture partner Starbucks. Now, Starbucks is considering an exit from India due to rising costs and growing losses as baseless. However, the coffee chain has been facing challenges with fewer customers visiting its cafes. NDTV Profit Sessa joins us to give more details on this story.
The consumer has dismissed reports regarding Starbucks' potential exit from India as baseless. However, it is important to note that the company is sailing through choppy waters in recent times as fewer consumers are walking into its cafes. Although the company remains committed to opening 1,000 stores by 2028, the pace of new store opening has been slower than its plan of opening one outlet every 3 days. In the September quarter, for instance, it opened 19 stores, which translates to one new store opened every 5 days. Also, Starbucks experienced its slowest growth in India in FY24 since the pandemic, with net sales increasing by only 12% to around 1,200 crore. Revenue slowed to 2% in the September quarter amid softer demand trends. The India unit, a partnership with the Tata Group, took 11 years to reach 1,000 crore in revenue. However, it still remains an unprofitable venture.
The government has proposed a new bill called BULA that aims to ban unregulated lending activities and persons not authorized by RBI. My colleague Pallavi Nahata is again joining us to give us more details.
The Department of Financial Services has proposed a bill that's called Banning of Unregulated Lending Activities, and as the name suggests, it is going to enforce a ban on persons or entities not authorized by the RBI or other regulators. This is as per the draft document. Now, essentially, the new law will also ban public lending businesses not registered under any other law. Currently, the government has invited comments or suggestions, and the deadline for that is February 13th. The new law also prohibits funding or advertising that is related to such operations. Now, according to the draft law, it aims in setting up an authority to create a comprehensive database of legitimate lenders, and any violations under this new law will be cognizable and non-bailable with penalties and prison terms. Now, this proposed bill is expected to bring in more transparency and more regulation in a sector at a time when the demand to access, the demand as well as the access to credit has risen substantially.
Thanks for that, Pallavi. Now, viewers, this is one of the most touted and ambitious schemes announced during the first budget of the Modi 3.0 government. Close to 7,500 crore rupees allocated to schemes to fund offshore wind power projects. The first projects were to be set up in Tamil Nadu and Gujarat. The idea was to set up large windmills in the sea and bring power back to the shore. But this ambitious project of the government appears to have run into some trouble. There are no takers for the funding offered by the centre. As a result, what has happened is ONGC and NTPC Green have come forward to take up this challenge. But there's a catch. And my colleague Prakash Srivastava is here to give us that story.
These two joint ventures, the joint venture of NTPC Green and ONGC Green, what they have asked is that basically this first block which was offered by government in June has not generated enough interest in the developers, So what they have said is that if government offers these two projects to them on nomination or cost plus basis, they can take up the survey activities there on priority, and then they can also develop it as a demo projects, where it can develop a lot of interest in the minds of the investors, because especially the cost of setting up these projects is way too high compared to what the government has offered in terms of VGF. They have offered around 6,853 crore rupees. But the setting up this 1000 megawatt for two projects would cost around 25,000 crore, so which they believe is not lucrative enough for them to undertake these projects. But ONGC and NTPC, given the kind of expertise they have in these sectors, ONGC has been setting up offshore oil and gas platforms, and NTPC has the expertise in generation and evacuation of power, which both of them can combine to set up these projects where nobody has right now shown enough interest. So going ahead, I think they believe that this is the logical way in which they can generate interest in the mind of the developers going ahead if government provides them on nomination basis. That's the condition that they have, I think, right now in their mind, and they are also discussing with the government on this.
Thank you for giving us that story, Vikas. Now here's a big exclusive. Chairman of Raymond Group, Gautam Singhania, told NDTV Profit that he wrote the rule book for the realty business. Listen in.
See, we started with our own historical land, and then we followed an asset-light model where we're going for JDAs. Today, we've got about 5 JDAs against all other relative developers in the city. It clearly shows that we're bringing a value proposition to the partner. We're the only company that's delivered 2 years ahead of RERA. We're doing a slab in 6.5 days. We have 25% market share in Thana. It's a good quality product. Our projects get sold off plan. So we've created our own rule book because we didn't know the rule book. We didn't come from the industry. So today, in Thana, we are a preferred developer. We've got Queen's Necklace on Bandra East, which is coming up now. We're on the 3rd basement. But almost 60% of inventory is sold.
A bizarre mistake may have led to the surge in India's trade deficit in November, which has contributed to the pushing the rupee to an all-time low. Officials have double-counted gold shipments in warehouses following a change in counting method in July. Rishabh is joining us to give more details on this story.
What we're hearing, and it is still reports that we're attributing this to, is that the record gold import number for November, which came in at roughly, almost at $15 billion, about $14.8 billion, that was due to double counting, a certain double counting. And what we're also hearing now is that there is a probe that has been ordered by the Commerce Ministry, the intelligence arm of the Commerce Ministry, called the DGCIS. They will be probing it, and they will be coming out and and the reconciliation of this data will be occurring in accordance with the CBIC, which is also which is the body that takes care of the gold imports in the country. So this is what we're hearing so far. This is what also led to the rupee we've seen rupee hit a record low today as well. So this is what we're hearing so far, and we will stay tuned in case there is a new import number that comes in.
Back home, the chaos in Parliament continues as a heated argument between opposition MPs and BJP members turned into a pitched battle. The BJP accused Congress leader Rahul Gandhi of pushing a senior MP, a claim Gandhi denied and responded with accusations against the ruling party. NDTV's reporter Aishwarya Jain joins us to explain what happened in the Parliament today.
The Congress MPs and the India Bloc MPs, which were marching from 50-60 meters away from the Makar Dwar, and it was led by Priyanka Gandhi, Mallikarjun Kharge. In a queue, they were coming towards Makar Dwar, and as soon as they entered, it was the BJP MPs who were already there. The face-off happened. It was the India Bloc MPs who tried to take the stairs to go inside the parliament, but there was blockage because already BJP MPs were protesting. There was scuffle that was seen amongst different MPs, but the allegations that the Bharatiya Janata Party MPs have levelled on the Congress leader Rahul Gandhi is something that we can also witness in several of the videos. Remember, it was Pratap Sarangi who first stated that because Rahul Gandhi was trying to go inside, he pushed Mukesh Rajput, and because of the imbalance, Mukesh Rajput fall on Pratap Sarangi and he fell down. There are counter allegations by the Congress party that BJP MPs pushed Manikam Tagore, and then the Congress leader of opposition from Rajya Sabha, Mallikarjun Kharge, fell down. Priyanka Gandhi said that on record. So there are claims and counterclaims. The legal options were explored and the complaints had been registered to the Parliament Street Police Station.
New Zealand is now officially in the grip of a sharp recession as the country's GDP drops by 1% in the third quarter of 2024. This marks the second steepest two-quarter decline since the 1991 recession. Barring the disruptions of the pandemic, as a consequence of this sharper than expected recession, the Central Bank of New Zealand is now under pressure to exercise aggressive rate cuts of 50 basis points in February 2025. The economic mobility of the island nation is in fact also reflective in the two-year low decline seen in its local currency. Now, speaking of the geopolitical tide that turns as Ukraine attacked the Russian territory with 13 missiles and 84 drones. Russian officials reported that the attack triggered a fire at an oil refinery in southern Rostov region that burned for hours. According to Russia's defense ministry, air defenses shot down 84 drones over Russian regions. Governor Yuri Slyusa said that the Novoshakhtinsk oil refinery has been repeatedly targeted by Ukraine. Russian general highlighted that Russia's oil infrastructure funds a significant chunk of the Russian war economy. One person was injured during the attack before the fire was put out. The ICC has confirmed that matches between India and Pakistan at ICC events during the 2024-2027 rights cycle will be played at neutral venues. But what exactly does neutral venue mean? And where will these matches take place? To give us more insight, NDTV's Osama Shab joins us with the details.
The ICC has confirmed that the ICC Champions Trophy, all the matches involving India and Pakistan, especially in the Future Tours program 2024 till the 2027 cycle, will be played at neutral venues. What it basically means is that all of India's matches in the upcoming ICC Champions Trophy, which is going to happen next year, all their matches will take place at a neutral venue. Now, this can either be UAE or Sri Lanka, whatever that the ICC decides. Similarly, the T20 World Cup that is going to take place in 2026, which is being co-hosted by India and Sri Lanka, Pakistan will play all its matches, most likely will play all its matches in Sri Lanka and not in India. Now, ICC has also made a couple of more announcements with respect to the Women's T20 World Cup as well. That is going to take place in 2028. Pakistan is supposed to host the Women's T20 World Cup. The big point here is that it is not a part of that Future Tours program that is 2024 to the 2027 cycle, but the arrangements of neutral venues will also apply to this particular tournament as well.
Spin bowler great R. Ashwin has hung up his boots from international cricket. He spoke to NDTV about what lies ahead post-retirement. Listen in.
I think that part of me is still burning bright. I'm going to play for CSK, and don't be surprised if I try and aspire to play for as long as I can. I don't think Ashwin the cricketer is done. I think Ashwin the Indian cricketer has probably called it time. That's it.
Well, viewers, that's all the time we had on this edition of Profit 360. But do stay tuned to NDTV Profit for more news and updates.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
Houthi rebels are alleging that Israeli airstrikes on Yemen have killed 9 people early Thursday. Al Masirah Television, the main media outlet run by Houthis, is reporting that 7 were killed in an airstrike on the port of Salif and 2 were killed in IDF strike on the Ras Isa oil facility. The strikes also targeted 2 central power stations south and north of capital Sana'a. Listen in.
Today, the IDF conducted precise strikes on Houthi military targets in Yemen, including ports and energy infrastructures in Sana'a, which the Houthis have been using in ways that effectively contributed to their military actions. Israel will not hesitate to act in order to defend itself and its citizens from the Houthis' attacks.
according to a fresh Pentagon report that details actions accelerating key areas of conflict with the US. China is expanding its nuclear force, increasing its military pressure against Taiwan, and strengthening its ties with Russia. A senior American defense official said that the impact is a bit of a mixed bag because while there has been progress in some programs, China has slid back in others. Israel has killed more than 45,000 Palestinians and wounded more than 100,000 in the 438 days of Israel's war in Gaza. In the north, Israeli forces have again attacked barely functioning Kamal Adwan Hospital. The hospital director has said that dozens of people have been wounded in Israel's latest strikes. The ICU caught fire, forcing it to go out of service. At least 38 people have been killed and 203 wounded in the recent Israeli attacks across Gaza over the past 24 hours alone. Israel has once again blocked the UN from reaching northern Gaza as international organizations have been urging Israel to end its blockade and allow aid deliveries to the area. The United States, joined by Arab mediators, has sought to conclude an agreement between Israel and Hamas to halt the 14-month-old war in the Gaza Strip. As per local media reports, Gaza ceasefire mediators are urging Israel to agree to the release of high-profile Palestinian prisoners in the next agreement's next stages. Sources close to the talks in Cairo have said an agreement could be signed in the coming days on a ceasefire and the release of hostages held in Gaza in return for Palestinian prisoners held by Israel. US Secretary of State Antony Blinken has reiterated that Washington remains quote-unquote hopeful of securing a ceasefire deal between Israel and Hamas before handing out his duties to as President-elect Donald Trump's administration comes in. Blinken spoke at the Council on Foreign Relations, where he spoke about the wars in Gaza and Ukraine, as well as the future of Syria and the US relationship with Iran. Listen in.
Now is the time, assuming we get the hostages back, to move this to another place where they're not left holding the bag in Gaza. Because if they do, if they wind up holding the bag, they'll be dealing with an insurgency for years. And that's not in their interest. So Gaza has to be translated into something different that ensures that Hamas is not in any way in charge, that Israel doesn't have to be, and that there's something coherent that follows that enables the governance, the security, the reconstruction of Gaza.
The United States has warned that Russia is close to accepting a nuclear-armed North Korea as Moscow and Pyongyang defend their growing cooperation. In September, Russian Foreign Minister Sergei Lavrov had backed North Korea's reliance on nuclear weapons as a foundation of self-defense. Russia views the notion of denuclearizing North Korea as a closed issue. Russia is using North Korean troops to battle Ukrainian forces holding an enclave in Russia's Kursk region. Now, this report comes only a couple of days after the first North Korean troop casualties were reported by the US and Ukraine in the war that the Russian war machinery has been carrying on. In a significant move towards improving ties, India's National Security Advisor Ajit Doval met with Chinese Vice President Han Zheng in Beijing. Zheng said China and India should gradually resume institutional dialogue as well as exchanges and cooperation in fields such as economy, trade and culture to bring bilateral relations back onto the track of stable development. Now, this marks the first special representative level talks between India and China since December 2019. Several children have died during a stampede at a holiday fun fair in southwestern Nigeria. The incident happened at the Islamic High School in Oyo State, near the economic hub of Lagos. Security forces at the scene arrested the event's organizers. Children injured at the venue were rushed to local hospitals. Meanwhile, local media have identified the event's organizers as the Women in Need of Guidance and Support Foundation, which held a similar event for children last year. Listen in to what they have to say.
There's no way anybody in his right mind will not organize an event of this nature without involving security apparatus. I mean, people are very sane and they are alive to what is happening around us. You can't cramp 10,000 people, children for that matter, in a place and expect them to behave normally. You will be a person to really think like that. So we are not exonerating anybody who is connected with this organization event. But government is awaiting report of the security agency.
At least 11 people have died after a fire engulfed the entrance of a cafe in the Vietnamese capital Hanoi on Wednesday. The blaze blocked the entrance to the cafe and emitted thick smoke into the three-story building where over a dozen people were inside. The fire was extinguished after an hour. 7 people were rescued and 11 bodies were later brought out on stretchers. Police said the victims died of smoke inhalation. Officials confirmed that a 51-year-old man has been arrested in connection to the blaze. The pilot and co-pilot died after a private plane crashed after landing at an airport on the outskirts of Buenos Aires. The aircraft had flown in from Rio de Janeiro in Brazil. People inside a building struck by the plane were rescued by firefighters and were in a stable condition. Others in surrounding homes were also evacuated as crews worked to extinguish the fire. An investigation has been launched into the cause of the accident. A year into a plan to rescue Cuba's economy from a crisis gripping the island with inflation, dollarization, and a growing illegal currency market, the government has acknowledged that the expected results have not been achieved. The Cuban government is now promising to ease exchange rates based on supply and demand. Listen in to what the Cuban government had to say.
Tenemos la insatisfacción de que no se ha avanzado lo necesario, sobre todo en aquellas cuestiones que demanda nuestra población. Y ese nuevo régimen cambiario asume una mayor flexibilidad en el tipo de cambio al establecer que la tasa de cambio debe variar cuando se modifican las condiciones de oferta y demanda. Es un proceso complejo, pero va a ser un mecanismo flexible que se va a implementar, que evidentemente va a salir el banco con una tasa al día, va a hacer sus operaciones. Esto va a estimular que las personas se sientan atraídos y con más confianza a ir a vender sus divisas al sistema bancario.
The U.S. has reported its first severe human case of bird flu at Louisiana. The patient is in critical condition and has been hospitalized after suspected contact with an infected backyard flock. California, the most populous state in the U.S., has declared an emergency over the H5N1 virus as it spreads more widely in dairy herds. The virus has infected dozens of farm workers this year alone. A London judge has ruled that British police can seize nearly £2.7 million from Andrew Tate and Tristan Tate. The seizure is over unpaid taxes. The decision comes from Westminster Magistrates Court on Wednesday. Now, the Tates are accused of not paying tax on £21 million in revenue from online businesses. This revenue spans from 2014 to 2022. The funds in 7 accounts will now be forfeited. Judge Paul Goldspring stated that the Tates were required to declare and pay taxes in Britain and Romania. The brothers have been living in Romania since 2017. Not only this, they are also facing human trafficking charges in the country, which they deny. However, both the brothers have served prison time in Romania earlier as well. Satellite photos of Bandrejou, a town in Mayotte, reflects on the scale of devastation caused by Cyclone Chido that struck the French territory on Sunday. Cyclone Chido was the deadliest storm to have hit the territory in nearly 100 years. Although many ignored the initial cyclone warnings, believing the storm wouldn't perhaps be so extreme. More than 1,500 people have been injured and close to 200 people remain in critical condition as we speak. Authorities fear tens of thousands of people have died. A Royal Australian Air Force plane has arrived in Vanuatu. The plane is loaded with 8 packages and personnel to help with the relief effort after a violent 7.3 magnitude earthquake hit the South Pacific island nation on Tuesday. Now, the empty plane that airlifted Australian citizens from the capital, Port Vila, and tourists back to Australia. The US Federal Reserve has cut interest rates but has suggested it would make fewer rate cuts than expected in 2025 amid questions over its fight to bring down inflation across the world's largest economy. Jerome Powell, the Fed chair, said inflation had been quote-unquote stubborn, but also insisted that the central bank believes its rate hikes would continue to erode the pace of price rises. Indian rupee hit its all-time low on Wednesday, pressured by strong dollar demand from importers and likely outflows from local equities. The rupee fell to 84.9550 against the US dollar before closing at 84.9525, down 0.07%. Benchmark Indian equities indexes BSE, Sensex and Nifty 50 ended lower by about 0.6% each. The Bank of Japan has kept interest rates unchanged, but one dissenting board member's proposal to push up borrowing costs showed the bank remains on track to tighten policy early next year. As widely expected, the 9-member BOJ board voted 8-1 to keep its short-term policy rate unchanged at 0.25%. In a sign, policymakers preferred to tread cautiously amid uncertainty over US President-elect Donald Trump. Japanese automakers Nissan Motor Corp and Honda Motor Company have confirmed that they are discussing closer collaboration but denied reports of a merger. The ascent of Chinese automakers is rattling the industry at a time when manufacturers are struggling to shift from fossil fuel-driven vehicles to electric vehicles. Now, relatively inexpensive EVs from China's BYD or Build Your Dreams, Great Wall and NIO are eating into the market shares of American and Japanese car companies in China and elsewhere across the world. Plane manufacturer Boeing has resumed production of all airplane programs that had been halted by a machinist strike in the Pacific Northwest. Now, the plane maker has confirmed last week that it restarted production of its best-selling 737 MAX jetliner in early December. In November, 33,000 factory workers ended a 7-week strike. The workers were demanding a 40% wage increase and the restoration of a defined benefit pension they lost a decade ago. Boeing has now resumed wide-body programs in Washington that were impacted. TikTok and its parent company ByteDance have asked the US Supreme Court to block a law requiring the app to be sold or banned by the 19th of January over national security concerns. The justices will hear arguments on the 10th of January but have not issued an injunction yet. Now, the case stems from a lower court ruling that upheld the law. The popular social media platform has more than 170 million users in the US alone. Apple is reportedly in talks with Tencent and TikTok owner ByteDance to integrate their AI models into iPhones sold in China. Now, this follows Apple's recent rollout of OpenAI's ChatGPT in Siri globally, enabling users to get assistance on phones, photos, presentations, and documents. Apple briefly fell out of China's top 5 smartphone vendors in the second quarter before recovering in the third quarter. The Dutch Data Protection Authority has fined Netflix $4.98 million. The fine is not for properly informing customers about its use of personal data between 2018 and 2020. An investigation launched in 2019 found Netflix's privacy statement lacked data. The DPA said that the customers were not clearly told how their data was being used. Now, Netflix has since updated its privacy statement and improved transparency. However, the company has objected to the fine. The Association of Tennis Professionals has paid $1.3 million to 26 players in 2024 under its baseline program, which guarantees a minimum income for the top 250 ranked singles players. Launched as a 3-year trial, the program will boost payouts next year. Christopher Nolan and his wife, producer Emma Thomas, received a knighthood and damehood for their services to film at an investiture ceremony at the Buckingham Palace. Now, King Charles awarded the filmmaking couple.
A little less nervous, having been here once before, because obviously coming to the palace the first time was very, very daunting, but being back here was quite special. But doing this together is really unusual, remarkable, an incredible honour. Well, we're working on something. We haven't said what it is yet. We're not quite ready to say what it is, but soon. We'll start filming in the first quarter of next year, so we're getting there.
From military member to acclaimed chef, Sung An's journey to becoming a judge on Netflix Culinary Class Wars has been anything but conventional. The 42-year-old Korean-American chef is the founder and owner of Musu Seoul, which earned 3 Michelin stars in 2023. Listen in.
Before I went to school, mechanic school, I accidentally I saw culinary school, which I didn't know what it was at that time. It's people in a white shirt and stuff like that. So I was like, okay, let me see what it is. And I went in, and I was intrigued. I got hooked in the first when I first saw it. So curiosity, killed the cat. I thought I could always go back to mechanic. So okay, let me just drop everything. Let me try this cooking first. But from the first day until now, I haven't looked back. I just, I'm here now. So.
Is this a buying opportunity for an index trade? Would you be looking at maybe collecting some blue chips right now?
Sure.
But it's a today question.
So basically, you have to phase it out, right? Because right now, see, one thing is very clear. Dollar index at 107 and US 10-year at 4.5. So you are not going to get FII money in a hurry.
Yeah.
That is clear. So let us be but valuations in banking and of course cement, because the cycle has bottomed out. I would say that in these two sectors, for example, I was just taking, for example, Federal Bank, I have taken names of ICICI, SBI earlier. All these banks are very, very attractive. 7p, 10p, Federal Bank is 10p stock. 10p stock, 1.2 times price to book on FY26. And now they have got Mr. Manian, right, who is, definitely, and I think they'll be doing some meet by March at least, and where Mr. Manian will brief their plans on how to improve ROE, ROA. So I think, see, it's and please, I am putting a disclaimer. that everything what I am saying is part of our portfolio, is our view, but these are my personal views. And investors have to consult their own financial advisor and do their own due diligence. And these are not trades for today. Let me make it very clear.
Okay.
If you are thinking from medium to long term perspective, this is the view.
From the India perspective, that economy में क्या हो रहा है, कुछ गड़बड़ है क्या? Are we entering a bear market? Is the last 4-year का party over? Are you sensing any of that?
I would not say so, because in my view, in fact, the government after the election season is over is going to focus back on economy. RBI has made it very clear that now their priority is growth. So I am saying that if economy continues to do well, at some point this trade of Trump trade, what I call it, where dollar appreciated from, so dollar index moved from below 100 to 107, or US 10-year moved from 3.4 to 4.3, 4.4. At some point this trade will reverse. And if that coincides with economic recovery in India, we are headed for good times also. So you cannot rule out that possibility. Till then, you have to be safe in companies like ITC, where, for example, where I feel that the demerger announcement which has come on and which is going to happen on January 6, and I remember Mr. Puri telling it when the ITC stock price was 200, that this is not the right time to demerge hotels. And he has proved to be absolutely right. He is demerging the hotel business right at the peak of the hotels. Today I was reading hotel room rates are at all-time high.
You told Mr. Puri not to, this is not the right time.
No, I am not.
Mr. Puri said that.
He had said that at 200 rupees when everybody was asking him that why don't you demerge hotel business, and he is doing it now. And now when the company is making 1100 crore EBITDA, company has net cash of 1000 crores, you see valuation of Indian hotels, market cap is 1,25,000 crores. Now, ITC's total market cap today is 5,80,000 crores. I will not rule out that once the hotel business is demerged, today dividend yield of ITC is 3%. And if hotel is a capital intensive business, so if you demerge it, your cash requirement becomes zero for ITC. So your dividend can go up to 4.5% dividend yield in ITC. And it protects you in such kind of environment when markets are absolutely volatile.
Parag, very quickly, I mean, what do you do? A lot of people would have interest in Asian Paints or some of the other paint companies. Are you constructed there, or
I have not. We don't have any paint stock in the portfolio, and unless there is a significant correction from here on also. Of course, one thing which is in favor is on margin side because oil has come down. But even when during festive season the volumes were not good, and plus of course the new player has entered who has a lot of cash. So definitely it is the sector will pass through some pain, but of course great companies pass through such times, and that is a time to buy. So we'll evaluate and we'll try to buy at a right price. Either when we see some catalyst or some competition reducing, these are great companies, so it is good to own during bad times, but up till now we have not bought.
Parag, let me come to you, and this is one of those days. I think you called it right at the start with
FMCG,
IT and FMCG and pharma. But would you double down on that? I mean, even broader than just the index. Are you going to look at only your nifty large cap blue chips right now?
See, one thing is very clear apart from, so I completely agree with Shrikant what he said, that between banks and IT and our portfolio, we are very, very significantly underweight IT and I would say equal.
Why is that, if I may ask?
No, because see, basically market, so I think on the first show when I came here, I was bullish on TCS, but at the time the price was different, and we still hold TCS only, that is the only stock in IT stock in our portfolio, TCS, and that too much significantly underweight position. And remember one thing, that today Accenture is going to report numbers in the evening after market. So that might change sentiment a bit. So I would not say that IT is a sell at today's price. But definitely banks, if they fall more, definitely I'll go with names in large caps, ICICI, SBI, and in mid caps, as I told you, Federal Bank. And one another name which comes to my mind, and of course it is there in our portfolio, is LIC Housing. People have just completely forgotten that company. And remember, if rate cuts are limited, then this company will also benefit. As I told you, they are mortgage lenders, so immediately when the repo rate is cut, they have to pass on the rate cut to the borrowers. So their margins come under pressure. If liquidity improves, as I said, which right now is in deficit because of the advanced tax payments. If the RBI improves liquidity in the system, it is good for this company. Remember, FY26 book value is 725 and stock price is 587 today. So,
but in that space, then why LIC Housing Finance versus some of its peers?
So Aavas is also something which is in our portfolio, which we like,
Bajaj Housing
where
Finance?
35% of the book is at fixed rate.
Okay.
So they will benefit also. If there is so on one hand you have LIC which doesn't benefit due to rate cut. On other hand, Aavas, it benefits due to rate cut. And remember, these are 7-8 year long loans, right? So basically, rate cut is for real. Plus, the management is absolutely calibrated, 20% growth, about 3.25% ROA, excellent franchise, and plus, most importantly, I don't know the current stock price, but there is an open offer at 1765 by a new private equity fund which has entered.
Aavas you're talking about. Okay. So
there's an open offer at 1765. I think yesterday it was 1660, right? So there's an open offer at 100 rupees higher than today's price. Which is going to come 100% by CVC, the new private equity who has bought stake from Canara Capital.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
How many brands can boast of having been in existence for 100 years? Well, one that definitely can is Raymond, and we have the opportunity for a very special conversation today with the man behind it all. Gautam Singhania, thank you so much for your time for us here at NDTV, and this is I would say really a standout year, one that will be remembered, because how many brands can actually make it to 100 years? Stay relevant, and for Raymond, this is clearly a very big year.
Yeah, absolutely. I mean, we are in a centenary year this year. If I know correctly, there are about 17 brands that have actually made it to 100 years. We'll probably be the 18th one. And, you know, we're still relevant with the consumer. So the company has tremendously evolved from 100 years ago, which when it made blankets for the army, to today, the world's largest worsted fabric manufacturer, suits manufacturer. So yes, it's been an interesting journey, and we look forward to the rest of eternity, I would say.
No, so just coming back to that journey for a second, starting off in 1925, like you said, woolen blankets, serving the Indian Army. For the longest time, the destination for men's wear at special occasions. But you've also, in this 100th year, seen a new avatar of the whole business. You are now spinning it off into 3 sections, looking at newer businesses as well. Explain to us the thought behind us and the journey, where you want to stay relevant, but you also want to stay in tune with what is needed in terms of change.
So let's just take the textile business first. The textile business in itself has grown. What was fundamentally a worsted manufacturer then grew into polywool, then into polyviscose, then into garments, then into brands. Today you got Raymond, Park Avenue, Parks, Color Plus. You have the whole distribution network that sits on top of it. You have the export business to all the customers. Then you started new product lines. So over the counter, while we were selling shirts, we started selling shirting fabric, cotton fabric, polyester fabric, all kinds of fabrics of shirting. After that, product line by product line has grown. So it's moved actually into a lifestyle brand. You got ethnic wear, you got sleepwear, you got inner wear, you got custom tailoring, you got made to measure. So the Raymond brand has actually evolved and has become more of a lifestyle brand. Of course, we are very strong in the wedding space. We do the ethnic wear, we do the suits and the sherwanis and everything. And the other business which was small over the last 2 decades was the engineering files business, which then acquired the auto component business 20 years ago, and then we did the merger with Many Engineering. For the last 8-10 years, I've always had the thought process of how do I create shareholder value. And as a company which had real estate, lifestyle and engineering auto, you're always getting a conglomerate discount. This became more when 2019 when we actually started our real estate business. So now you had 3 proper businesses within one company. And we always wanted to spin them off into separate companies for 2 reasons. One, you'd get better quality investors and then not get the conglomerate discount. Number 2, you can create the best management and governance structure and the best reward system, because that persons who work for that company then get their bonuses, etc., depending on the performance of their division, as opposed to a conglomerate if somebody else doesn't perform. And of course, that also helps in the re-rating. So when we sold the FMCG business, I took 100% of my proceeds that I got because I was a 50% shareholder and put it back into the business. We became debt-free. We'd committed to the markets we'd be debt-free by 2025. We became debt-free in 2023. By the virtue of the fact that we became debt-free, we were then able to announce the demerger of the lifestyle business, which was completed earlier this year. And then we announced the demerger of the real estate business. So by next year, mid next year, 3rd quarter next year, you'll have 3 separate companies. You'll have the lifestyle business, you'll have the real estate business, you'll have the engineering auto business. And the market has certainly rewarded it because they like pure play companies. If you see the lifestyle business, we've created best of class board there, we've created top class management. Same we will do with real estate, same we'll do with engineering auto. So we're moving to a very different type of professional company. I've also got to think about it that I've also been here for over 4 decades. How do I set up the company for the future? How do I set it up for, my kids are not coming in the business, they're too young. So how do I set it up for the future?
Very, very interesting thought. And I'm just going to pick out a few of those points as follow-ups. Let me start with the sale of the FMCG player to GCPL, to Godrej Consumer. And then, of course, you talked about how you invested all of your stake back into the business. Let's start with the idea of hiving off the FMCG play. Did it seem non-core in a sense?
You know what? Everything is for sale at a price, and I think we got a very good price. I think it was one of the best win-win deals because from GCCL point of view, and I can run through the reasons why they thought it was a great buy, because they were able to immediately go from 6 lakh outlets we had to 2 million outlets that they have. They were able to take the EBITDA margin up from 8%, which we were, to 26%. And they got an established play in the FMCG space of deodorants. From our point of view, we took the money, we put it back into the business. That paid off debt. By paying off debt, we were actually able to do the demerger, which is what we always wanted to do. So it was a real win-win transaction. And you've seen the markets reward the demerger. And this is just the beginning of the journey. So Park Avenue, they will continue to make deodorants and advertise on it. We'll continue to make apparel and advertise on it. It'll work a win-win for both. And GCPL shareholders have certainly rewarded them. Our shareholders have rewarded us. It was a really interesting financial transaction.
You also talked about setting, the context of the demerger, which I thought was interesting from your comments, is setting it up for the next generation.
For the future.
For the future. Could be professionally managed, could be any which way.
See, my elder daughter is 19. I don't know if she's going to come into the business or not. But she's certainly not going to come in for the next 5-7 years. Because she has to get an education, she's doing other things. We set up a professional company. She'll still be the principal shareholder. My family will be the principal shareholders. At that point, if she decides, we'll see if she wants to come in. If she doesn't want to, she's still got a system and a process that will do well for its shareholders. It's not only my family who are shareholders, there's so many outside shareholders who put their faith in us. So we have to do what's best for the business, we have to do what's best for the family, and if you can marry the two and do the best for both of them, it's the best of all worlds.
No, it's a very dispassionate and I would say practical view to succession. In a country where family businesses, succession and professional management always get mired together, which is why I thought it was interesting.
Who knows? I don't know if my daughter after 5 years will want to even come into the business.
Yeah.
I don't know.
Yeah.
Today's young 19-year-old girls are totally independent in their mind. She might decide to become an artist, or when she rides horses, she's an equestrian rider. She may want to pursue that, or what? I don't know. So whilst that process on, we got to do what's best for the millions of other shareholders as well, for the tens and thousands of employees that are here, and we got to do what's correct for the business.
Undoubtedly, the idea of value unlocking is something that the market has rewarded. It has been good for shareholders. One vertical listed, one down to go. So now,
it's not one down to go. One will become two, so there will be three listed.
Yeah, okay. So there will be 3 listings.
Because the last one will break into 2.
Will break into 2, correct. Now, just let's talk about each of the verticals. The lifestyle business is the lion's share. I think 74% of revenue, if I look at it on a consolidated basis right now. Will it always be in prime position, or do you see engineering, real estate catching up
No, I certainly see real estate catching up. Because real estate, you come to think of it, is only a 5-year-old business for us. So it's going to, I think it will grow at a faster pace, because I believe if India is going to develop and India is going to be built, it's one of those businesses we've taken 5 years to set up a base. But where we were starting off with, say, 500,000 square feet projects, today I can take on 5 million square feet projects. And if I get a 5 million square feet project, it's not if, it's only a matter of when I will get it. That will then start growing at an exponential pace to where we are today.
Yeah, and even in terms of profitability, it looks most exciting. You would say real estate, even in terms of EBITDA margins, etc. Also, your thought of the focus you have done, a lot of joint developments as a strategy, not only looking at investing in very expensive land banks. Talk us through the strategy for the real estate business.
See, we started with our own historical land. And then we followed an asset-light model where we're going for JDAs. Today we've got about 5 JDAs against all other relative developers in the city. It clearly shows that we are bringing a value proposition to the partner. We're the only company that's delivered 2 years ahead of RERA. We're doing a slab in 6.5 days. We have 25% market share in Thana. It's a good quality product. Our projects get sold off plan. So we've created our own rule book because we didn't know the rule book. We didn't come from the industry. So today, in Thana, we are a preferred developer. We've got Queen's Necklace on Bandra East, which is coming up now. We're on the 3rd basement. But almost 60% of the inventory is sold, or whatever we've launched. So people are seeing that we are building quickly, we're delivering quickly, we're building a quality product. So which is why we're getting joint development. As long as I'm getting joint developments, why do I need to buy land? If I get a good piece of land at the right price, I might consider it. But we're very strict on financial discipline on what we want to do.
And that becomes a problem for a lot of people in this space, financial discipline. So in the foreseeable future, JDAs, joint development agreements, asset light and MMR is going to be the focus?
Mumbai is certainly the focus. We may look at Pune if something nice comes up, but certainly only Maharashtra for the time being.
Okay, let me come to the lifestyle business because, of course, that's the lion's share. We're speaking at a time which is great for the business. Usually Q3, wedding season, we're in the midst of it. But the backdrop on consumption overall, and not talking about your company, but the space or even the sector, is a bit mixed. There are concerns about whether that appetite is there, whether that story of appetite for premium products continues. What are you seeing? What are you hearing?
From our point of view, I mean, if you look at the sectors that we are in, real estate continues to do well because we're in the affordable luxury. We're not in the 1.5 lakh rupee, 2 lakh rupee square feet market. We've got 3 products, 10X, which is 1 and 2 BHK, addressed by GS, which is 2, 3, 4, and then Invictus, which is very small, which is 3, 4, 5. If I look at the wedding space, we are today got a very strong wedding season till April, May. First half was a little slower for a multitude of reasons, but there's strong demand. And I think if this continues, we'll see a demand recovery. Now, what's happening in sector by sector, it's a longer conversation, different conversation, but I can only tell you from our sector.
Yeah, and since FMCG is no longer your problem, then you don't need to answer the question about where's the middle class.
Well, we have the middle class today. Raymond goes from 300 rupees a meter to 10 lakh rupees a meter. That's 3,000 times in price point. We're the only brand in the world that does this. There's no other brand that does 3,000 times in price point in the same brand.
So you're not seeing pain at the store level in terms of demand?
So we saw it in the first 6 months. First 6 months was difficult for everybody. I think the recovery is there. I was just having a conversation with somebody on the phone. He said we were just having that the amount of spend that's happening in a wedding today has. Yeah. I'm seeing it after 10 or 15 years that this kind of spending has come back, and that just speaks of a positive environment, a positive mood. I mean, the amount of wedding invitations that I've got, say, this December is more than that I have in the last 10 years. So it just shows there's a buoyancy, there's a spending, there's vibrancy, and I think there's always a lag that you'll see this off.
Yeah. Only thing about weddings is I don't know if the proportion of spends on the groom's clothes increases.
It does, because see, what happens is it may not increase the proportion of everything else because you're spending a lot of money. But when you go from 2 functions to 3 functions to 4 to 5 to 6, you still need clothes.
Yeah.
You're not going to repeat the outfit on the next day. So one day you might have a churidar kurta, one day you might have a sherwani, one day you might have a bangala, one day you'll have a waistcoat with a shirt, one day you'll have a suit, one day you'll have a jacket. You still have 6 different things you can give. I mean, are we talking about a wedding that's happening, it's starting today and is going on till Monday. So it's a 5-6 day wedding.
Yeah. No, and we're famously in times of weddings which go on for months. So, of course, it's an interesting time. But just to speak about the textile industry for a little longer, for Indian textiles, we're in an interesting space right now, vis-a-vis what's happening in the neighborhood. And I just want your views on that, because Bangladesh, for example, has started selling off units of one of their largest textile companies, private textile companies, because of bankruptcy. You saw that impact with a lot of textile stocks also reacting positively. Just on the ground, I'm wondering if you're seeing that opportunity for India.
Absolutely. I mean, we've seen, as soon as all this crisis started, customers have started coming here. But see, Bangladesh has 2-3 issues. One, it was more the casual wear industry, more than the formal wear industry. So that's already started to move here. We've got inquiries, but we'll take time to develop that because we're not so much in the casual wear space because we outsource everything. But in the formal wear, we immediately did get orders. Number 2, the biggest problem with Bangladesh was it had no fabric supply. So customers are now saying it's not only the cost that's the advantage, it's the lead time. So if you took, say, bought fabric from me, shipped it to Bangladesh, and then they did the garmenting, today you're getting an integrated solution in India. So you might pay a little bit more money, but you save 10-15 days. And then your demand forecasting for 10 to 15 days is shorter, and that has a value in money.
Having said that, the integrated solution was always available in India. That little bit more was the problem, right? It costs a little more.
The minute you have a little bit of instability in a nation, or you see a risk to your supply chain, you then move. Because a customer sitting in the US cannot afford a disruption.
So, which is why I'm wondering, because the instability is there right now, may resolve itself quickly,
So
may not.
Once you change your supply chain,
Yeah.
then to get it back is very difficult. Once you see, the way I always say, I say, if China was so good, why do our exports go up? There's obviously a value that a customer sitting in the US or Europe is seeing in you that is beneficial to him. Because if China was so good, they'd only buy from China. Why would they buy from you? If Bangladesh was so good, why would I be able to export? I would not be able to export. There is a value I provide, and I must continuously capitalize on that value I deliver.
On a sector industry basis, what do you think Indian textile companies, exporters need to do to become competitive in a sustainable way on a global level? I mean, this is Bangladesh, but then there's Vietnam, there are other countries who are competitive. What does the industry need to do?
I think one of the things this country needs to on a macro level is the labor laws. We need to figure the labor laws out, which has been a long pending issue. But having said that, I think India is in a great place. Modi ji has put us right on top and from a perception point of view. And Mr. Trump coming, if he imposes tariffs of India, he's going to put more on China from what he states. So his tariffs will actually become a competitive advantage for us. So let's wait for him to come to power and see what he does. But he'll do less damage to India than I think he will do to China. Therefore, you'll have an arbitrage. Therefore, you'll become much more competitive. So if he does put tariffs, it's good for us at some level.
Yeah.
But he'll also have to keep his inflation in mind. So I don't think he's going to do something that will hurt exports from India. So on a macro level, I think we're in a good space.
Yeah, you've led me beautifully to the Trump question. I think that's the one conversation point everywhere, all the time. What's your hot take?
Well, I mean,
Trump good for the world?
I think he will be. He may not deliver the products in the correct way, but I think he'll deliver the products. I think he's got his own unique way of doing things, and I think it will be an interesting time.
Interesting at the very least.
Yeah.
But from an India perspective, perhaps positive.
Well, I hope so. That's what I believe. I'm not an economist, but I believe so.
Yeah. You have now with these three verticals, and of course, a kind of, you're at a vantage point to even get a sense of what's happening globally. In terms of global economy, in terms of exports, do you see 2025 as an improvement? Of course, you have geopolitical crisis hovering, you have two large wars, Europe is in a bit of a crisis and that might continue. But what is your sense in terms of whether we're at the bottom of that cycle as far as exports goes? And
we are seeing positive inquiries on exports. Geopolitical issues are there. Nobody can run away from that. But what's happened in Bangladesh, what's happened in Sri Lanka. Sri Lanka were large exporters, but today with their own financial issues. So I think people are realizing the strengths of India. I think Modi ji has also positioned India as a very different country over the last decade. So it's working out positively for us.
We've spoken about textiles, we've spoken about real estate. Let's talk a bit about the engineering division and the acquisition of many. Is that where the blue sky potential comes in for the group?
Yes, certainly. I mean, see, we had an engineering business which was the old legacy engineering files, and then we had the auto components. Many had auto components and then aero and defense, which is up the value chain. We merged the auto components together to have one team, reduction of costs, synergies on customers. Aerospace defense can grow exponentially. Here was a company that was stuck in COVID with debt, etc., but very good company with high quality precision engineering for titanium, etc. Aerospace, of course, is going to be booming. As you've seen, you can't buy an aircraft today. And the more components we're able to get into an engine or into an aircraft, the more will be the growth. Also, with the government policy that if you're buying so many aircrafts from whether it's Boeing or Airbus, they have to increase their sourcing to India. You position yourself in a great place.
But aerospace is so off everything else that the group has been doing. I just want to understand the thought behind getting into it.
The group is trying to fly.
No, absolutely. Absolutely. But I'm just trying to understand the expanse of it, the expanse of things, and then
what we're doing is at the core of the group, we're delivering shareholder value. That's what we do. These are just different means. Lifestyle is a different mean, real estate different mean, engineering auto is a different mean. Which is why we come back to the first question of demerging all the entities. You have different skill sets that are required for each business. You have a different management team, a different board, a different mindset. And eventually you look at the returns on each of those businesses.
Yeah, no, absolutely. It makes perfect sense to demerge if you're doing so many varied things. But just coming back to aerospace, what is the upside that you see in it? And for the engineering vertical, as and when, of course, it's a listed entity, what is the kind of upside you see in it? What is the kind of
No, I think I just said, like I just said, I said if more and more aerospace components get sourced to India as part of the bilateral agreements, what share can you get of that?
What has changed?
And at another level, I think whether it's auto components, whether it's aerospace, let's take the whole engineering space. If you take Europe as a manufacturing area, this is not a labor issue there. It's a power issue there. It's not only the cost of power that's going on, because machining and all has a lot of power consumption. It's the uncertainty of power. So whilst labor cost is an issue for them, while they could live with a higher cost of power, with the war in Russia-Ukraine, even certainty of power is less. So they would be happy to move. I mean, I'm betting on the fact that a lot of manufacturing in Europe would start moving to this part of the world.
Yeah, that's where the big, I suppose, opportunity lies.
And the cost benefit. What you did with textiles 25 years ago and took advantage of labor, you can do it with this.
Would we be on par in terms of technology, in terms of R&D, in terms of those kind of skills?
The fact is, if we supply to BMW, Mercedes, Audi, obviously we're on par with the components that we make. So we make, okay, there are certain components we can make and certain components we cannot make. So we have to learn the components we can't make. But the fact is we supply engines, components for Boeing and Airbus. Those are high precision technology items. So obviously you're at par.
You know, you spoke earlier in the interview, and it was a passing mention to China in the context of Trump, etc. I just want to understand how you see the China threat vis-a-vis India business. Our import dependence is now, and we're thinking about it, to cut down import dependence from China on various aspects. Even so, dumping is an issue in various sectors. How do you view China?
I think this is something the government has to look at. There is dumping even in the textile sector.
Yeah.
But eventually I think branding goes higher than dumping. We've seen all kinds of product. All you can do is report it, get people caught for it, etc., etc. But beyond the point, you can't do anything. It's for the government to deal with this issue.
True, but can India be a competitive, viable alternative to the factory of the world?
Of course it can. I mean, China, see, it comes down to a mindset issue. China makes a lot of quantity, we make quality. They make volume, we make value. And I said to you earlier today, I said, if China was that good, why am my exports growing? It's very simple. I'm offering something which China cannot offer.
For you, Mr. Singhania, I'm just trying to understand, as you've undertaken this demerger exercise, does it change the way you look at your business, the way you strategize your day? What changes for you?
No, I mean, the work, okay, so from my point of view, the work is tripled now. We're running 3 companies as opposed to 1. You have 3 sets of directors, 3 sets of management teams, 3 different set of investors eventually, because the people who want to invest in real estate. So yes, I think in the short term, the work has changed dramatically, but water will find its own level.
So you have increased value for shareholders at the cost of your time management.
Well, you know, I'm here to increase my own shareholder value, so why not? I'm happy. I'm enjoying what I do.
Do you do a 70-hour week? That is.
I don't count the number of hours because I enjoy what I do, so it's not that I'm working.
Do you believe in the philosophy of a 70-hour week? Because that's
the complete man finds a balance for everything.
Ah, that's a great way to segue in. So what does the complete man do on his time off?
Well, you know, I take my time off when I want my time off, and I'm working. So I'm always working. I'm always off because for me, work is pleasure. I could be sending 3 emails in a lift. It doesn't matter. And I find different ways to take my time off. So,
And of course, one of them is your passion for vintage cars.
Vintage cars, race cars. I've raced a lot. We're doing the big Raymond Auto Fest in January in Thana, which will be really good fun. I think it's going to be the largest collection of automobiles seen in this country. We've got vintage cars, supercars, vintage bikes, super bikes, modern classics, the Rolls-Royce Enthusiasts Club, Harley-Davidson Club. So it'll be a huge show. So it should be a lot of fun.
You know, as we wrap up, you talked about the complete man, and we started this interview speaking about a legacy that has gone on for a century. Today, when you talk about the complete man or the sense of what a complete man is it very different from 1925? And what has changed in your view?
Yeah, only exposure. The complete man has more aspects to become complete, because I mean, the proposition of being the complete man, as the world has grown, the exposure, your expanse has grown. In 1925, the complete man sat at Breach Candy and didn't really leave Breach Candy. So he had only 3 things to do, but today he's got 300,000 things to do.
Yeah. So here's to the 100 years of Raymond.
Thank you.
And building a legacy with a complete new look at what the future holds. Thank you so much, Mr.
Thank you so
Singhania.
much.
It's been a pleasure.
Thank you, it's a pleasure. Thank you.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. When you look at the application that you use to make investments in mutual funds, you see a snapshot of the returns that you get. Usually, this will be described as a portfolio return. And you will feel happy when it's in the green, of course, but you will also see what is called an XIRR. Now, if you know what this is, then very good for you. But I've found just in a dipstick in my office, that a lot of people don't really know what XIRR means. What is internal rate of return? That's what it essentially stands for. So we're going to help you understand why this is a very important tool to understanding how your portfolio will grow over a period of time, and why this is what you need to go for rather than a point-to-point return, which is a lump sum investment. Of course, that is also useful, but we'll talk about why XIRR is important to track as well. Apart from that, we'll talk about a fact sheet. This is data or information that is shared by mutual funds on an ongoing basis. It is available to the public. You just have to go to the website of the mutual fund, and you can go and look at how your mutual fund scheme has changed over the course of a year. And there is a lot of disclosure, a lot of information in that. Of course, when you look at that for the first time, perhaps it can be a little intimidating because there's a lot of information. But we'll help you, my guest will help you identify how to read that fact sheet and what you should take from it. Finally, I would also like to talk to you about Parag Parikh Flexi Cap Fund. Now, of course, a lot of you invest in this scheme, and very clearly this is a scheme that has taken a cash call. It has actually doubled down on that cash call in November, I've noticed, based on the latest portfolio data, because actually their equity holdings have shrunk just a tad bit and their holding of equity and debt has actually gone up. That served them well. They've outperformed the benchmark and they're actually positive since September. Of course, they're a very short time frame, but we'll talk about that and how cash calls have worked for mutual fund schemes in general. To speak about all of that and more, we've got Vishal Dhawan, Founder and Chief Executive Officer of Plan Ahead Wealth Advisors in studio. Vishal, thanks as always for taking the time. Very basic topic of discussion today, but I think important nonetheless. Do you find that a lot of people understand internal rate of return?
No, actually not. It's surprising considering how powerful SIPs have become.
Yes.
And the power that an extended internal rate of return actually does in terms of accurately describing to you how much money you've made. I think it's just a area which requires a lot of
So for
attention.
those people that don't understand internal rate of return, let's now shift away from Greek and move to a language that they understand. How do you explain XIRR or internal rate of return?
So I think you go back to asking yourself as an investor, how do I actually invest? So if you're buying a mutual fund, there are three ways that you've traditionally invested, or actually four, right? So one is you've put a lump sum of money one time, never bought anything else.
Yeah,
that's simple. You're just putting in money once, and maybe you withdraw the money after the next number of years.
Yeah.
The second is you do SIPs. And sometimes you just continue them forever. So it's easy because at least you know that you've been putting a certain amount every month.
Yes.
But the reality is that number is also changing.
Yeah.
You're going to increase that SIP. There might be a pause of that SIP. You might decide that I need a part of that money because I'm traveling. So there can be different inflows and outflows happening from the portfolio. The third is that you could have done a systematic transfer plan, moving money from a liquid fund to an equity fund. Or you could be using it for cash flows through a systematic withdrawal plan. Now, in all of these cases, the amount of money that is actually invested doesn't remain constant because it keeps changing depending on inflow, outflow, when it happens, etc.
The capital that you deploy is not the same.
Yes, and therefore, because it's not the same, and the time frame for which each of those capital deployments have happened are different from each other, it's important to be able to understand that if I want to look at rate of return, it would be unfair to compare some investment that I made 5 years ago with some investment which I made 1 month ago, because the outcomes could look very different.
So this gives you an internal rate of return, essentially maps out what you have earned for each installment of your investment, calculates all of that together and gives you a blended rate of how all of your investments have performed. So if you've got, suppose, a 12-month SIP, it'll calculate based on the rate of return of each of those installments, what is the blended rate on an annualized basis.
That's
correct?
right. That's right. So that's what it'll do. And it'll also do one more thing, which is that when you have outflows, it will also account for that.
Yes.
Because it's easy to account for inflows.
Yes.
You also need to account for outflows because that's how life is.
Yes.
And this is very different in mutual funds as compared to, say, real estate. In real estate, traditionally, you've bought something and then you've sold it.
Yeah.
But if you think about how do I account for the rentals that I make on real estate, then those are also cash flows. And therefore, this tries to make it similar, though everyone tends to talk in absolute numbers and says, I invested 1 crore, it became 2 crores.
That is the point, and everyone tends to also talk in terms of point-to-point returns. So they say, and look, the tendency is for all of us to do that. Ultimately, we're reaching the end of the year. We will look at where the Nifty 50 was at the start of the year and we'd say, okay, 14% growth, fantastic. But the thing about it is, and this is very interesting, you might actually notice, by the way, in case you invested in the Nifty 50 at the start of January and you've gotten 14% on what you invested in January. But if you had, for example, hypothetically, an SIP running in an index fund, you might actually notice that your XIRR is actually more than 14% potentially, or it's yielded you more than 14%. And the reason for that, Vishal, hypothetically, is that on the days in which you have deployed or that SIP has come through, the Nifty 50 would have been lower than it was in January at those periods of time. So you've accumulated larger number of units on those days, correct?
That's right, absolutely. So that's the most common reason. In fact, let me try to illustrate this with a very simple example, even for long-term investors besides the one-year investors. So let's say you 5 years ago invested 1 lakh rupees into a particular fund.
Yeah.
And then at the end of the second year, you decided that I had another 50,000 rupees to invest.
Yes.
And I invested that. And today the value of that investment is 180,000.
Right.
Now, in the traditional point-to-point absolute return thinking, you would have said, I have made 80% return.
Yeah.
Right? Because you would have mapped it saying 100,000.
Yeah.
Then you would have forgotten that I put in this 50,000 along the way.
Correct.
And you would have got some number. Now, if you actually built an XIRR on this, you'd find that your annualized return is about 11.5%.
Right.
And therefore, it's so important to account for time flows of money, because ultimately the whole thing about personal finance is 101 is basically about time value of money.
Yeah.
And that's what you're really accounting for here.
Yeah, absolutely. And so, therefore, of course, it's a good thing if you're, if you look at your screen and if it's positive, it's certainly something to smile about. But then understand the XIRR as well. And the best way, of course, to deploy funds over the long period is to look at the SIP, because when the markets are down, when the chips are down, you're actually using the same amount of money and you're deploying the same amount of money. And what that means is that you are buying more units in that month than you bought in the previous month, which is always a good thing. So more bang for your buck, especially over the long period. Do you agree?
Absolutely.
Okay. Let's talk about fact sheet, because this is an interesting one. I think there's so much information available. What do you look for when you look at a fact sheet?
So I think, it is probably that one tool that all investors have access to, which is very, very unused in our experience. I think most people think about it as, as some attachment somewhere, which I don't really need to look at.
Yeah.
And our experience has been that it's a treasure trove of information.
Yeah.
And it's kept getting better and better over a period of time, because either regulators have forced that to happen, or funds themselves have realized that, the more they disclose, the better it is for the end investor and the type of investor they bring into the scheme.
In fact, while we're speaking about it, we've decided to take the Parag Flexi Cap Fund as an example and look at how the fact sheet of Parag Parikh looks. So we'll pull that up on the screen so that you can take a look at it. Of course, I don't expect you to really read that. I can't read it myself, but this is what it looks like. So while we're talking about it, I'm going to ask you, Vishal, to look at the screen perhaps and indicate broadly the kind of information that is available to an investor. And in fact, let's zoom into the screen further. Let's talk about it.
So I think there's, some very, very important information built in.
Yeah.
One is the fund manager track record.
Yeah.
Who all are managing the fund.
Yeah.
And what you can see there is, typically in the case of Parag Parikh, you will see 5 names coming in there.
Yeah.
Why do 5 names come in there? It's a flexi cap equity fund.
Yeah.
You would have thought there might be one manager.
Yeah.
But what it's doing there is it's actually showing you that there are different people managing different components of that portfolio.
Rajiv Thakkar, Ronak Konkar, Raj Mehta, Rukun Tarachandani and Mansi Karya.
That's right.
Yeah.
And they are doing different things there. So someone's looking at the overseas component, someone's looking at the India component, someone's looking at arbitrage, etc.
Yeah.
The second thing that you get there is information about what are the kind of holdings that they have. How much of their portfolio is equity. For example, 66% of their portfolio is in equity.
Yeah.
About 21% is in a combination of debt instruments and cash-like instruments.
Yeah.
They have about 12.5% of their portfolio in international equities.
Right.
So all of this information is available to you in the fact sheet to be able to see. Which stocks are they invested in?
Yeah.
Which sectors are they invested in? What's the kind of portfolio turnover they have?
What is the turnover?
So it's 22% if you consider everything including the arbitrage positions.
But what does it indicate to you?
12%.
What is the turnover ratio?
This particular 12% indicator, for example, is a indicator that they don't churn the portfolio too much. So they are long-term investors themselves.
Yeah.
And in fact, one of the things that you will see across their fact sheet communication is the desire that they have that everyone coming into their scheme has at least a 5-year view. And that's because they themselves are building portfolios keeping that in mind.
Yes. You have quantitative indicators as well.
Yes, a lot of risk ratios are built in there. You have a Sharps ratio, for example. A Sharps ratio shows you how much risk was taken to generate what kind of return that they generated.
And less than 1%, less than 1 is good.
So typically the higher the better. So the more you get of it, the better it is. But essentially what you want to be able to try to do is, when you're comparing different schemes, you might find that there's one particular scheme which has a fantastic rate of return.
Sure.
But it may have taken a disproportionate amount of risk to generate that return. And therefore you take two sharp ratios and compare them and say, okay, on a risk-adjusted basis. A lot of people talk about risk-adjusted basis, right?
Yeah.
But how do you quantitatively look at this?
Okay,
Comes
so
from a fact sheet.
In this case, you're talking about a Sharpe ratio of 0.85.
Right.
What you're essentially saying is that in order to get this kind of return, which, and I'm trying to pull up the return over a period of time, if we're talking about 28.56% on a 1 year basis till November, we're talking about a Sharpe ratio of 0.85. You're saying somebody would have similar return but a Sharpe ratio of 0.65. That would be worse off than Parag Parikh's flexible
Yes. So typically what the Sharpe ratio tries to do is tries to look at risk-free rate. How much did you generate over a risk-free rate?
Right.
And what was the kind of standard deviation of volatility taken to deliver that? So as an investor, one of the biggest challenges investors face, not so much in upward trending markets, but clearly when markets go down.
Downside protection.
Is what happens when markets correct and they panic. So what you want to do is you want to see funds which have low standard deviation, which can actually then help with the Sharpe's ratio being higher.
Okay.
So there are many such ratios also built into the fact sheet. In fact, just on returns, you can find that there is multiple types of representation of returns as well.
Yes.
You will see there's trailing returns, you will see there's performance against the traditional scheme benchmark, then you can have an additional benchmark like the Nifty 50. You can look at rolling returns over different periods. So these fact sheets have so much information in them that I think they're really, really important when investors look at what decisions they're making, and they become even more important at certain times when things don't do well.
It's giving you also you were talking about different types of returns. Parag Parikh, for example, I'm looking at the third page of the disclosures on this, and there you go. See, you have lump sum investment performance compounded annual returns over a period of time since inception for a 1 year period, for a 3 year period, for a 5 year period, and for a 10 year period. If you scroll down further, you see a rolling return for a 3 year, for a 5 year, and for a 10 year period. And this is very significant because we spoke about XIRR, which is internal rate of return. A rolling return is slightly different from that. Why is rolling return important?
So I think the most important thing you have to imagine is you have to think about this like, say, a cricket match, right?
Yeah.
So, why is Virat Kohli such a great cricketer?
Yeah.
He's a great cricketer not because he's always done well in Australia. He's a great cricketer because he's been very consistent.
You're looking at the scorecard.
Yeah, so that's the challenge of trailing returns, right? You look at the last performance or the last 3 performances and don't feel good about it.
Sure.
But essentially what rolling returns does is it averages out your performances over, say, 6 months, 1 year, 3 years, and therefore it actually demonstrates consistency.
Yeah.
And that's what makes Virat Kohli a great batsman, that he's consistent, though there will be times where he will do, not so great, and there'll be times when he'll do spectacularly well.
You need to have a certain amount of time that you've spent managing a fund in order to have those longer rolling returns, right? And so therefore, newer funds don't have the advantage of showcasing their performance over a period of time, which is why something like Parag Parikh, which has been around for a while, has that 10-year rolling return.
Absolutely. It's